I see a lot. What are your two favorite technical signals? Arwen says the VWAP and the 200-day moving average, which is great because listen, he's using, well, I'm sorry, Arwen. They're using the 200-day moving average, which is the most used indicator on the planet. And Arwen's using the VWAP, which is which should be, it's not yet, but it should be the most used indicator when you're intraday trading. All right, Wesley loves the EMAs. So you can use a 200. Listen, there's different simple moving averages that you can use. You can use a simple moving average. So everyone should be using moving averages. But you can use a moving average, or you can use an exponential moving average. There's simple moving averages, which we call SMAs. And then you have EMAs, which is exponential. Now, traders are going to always tell you one is going to be greater or better than the other. There is no one that's better than the other. I will outtrade anybody using EMAs or SMAs. You just want to make sure that you are consistent with what you're using. Don't go back and forth. Don't look at the 200-day moving average, then look at the 200 exponential moving average and decide, hey, I'm going to take trades on this. I mean, unless you're consistent, you can do whatever you want. I just keep it simple with the simple moving averages. JAD 260 says that they like using the VWAP. So obviously a day trader, anybody that's day trading, listen, if you are a intraday trader, you're getting in and out the market the same day, and you are not using the VWAP, I'm telling you, you are gambling. You have no idea what the bias is of that stock or asset that you're looking at for the time frame that you're looking at. So everybody needs to add that VWAP. Even, I don't care if you got a million indicators on your charts when you're intraday trading, you need to add the VWAP, because the VWAP is going to give you a higher percentage trade in the direction that you are moving in. All right. Add that VWAP. It stands for volume. Actually, in the comment section, can somebody tell the crew here, what does VWAP stand for? What does VWAP stand for, and why you should be using it on an everyday basis when you're intraday trading? What does VWAP stand for? You said intuition and luck. Hey, look, when you trade long enough, when you trade long enough, intuition and luck is great. All right, so guys, the VWAP stands for volume weighted average price. VWAP, volume weighted average price. Volume weighted average price. So what are they doing? The line that you're going to see on your screen. So for example, let's say we were trading the SPYs today. Watch this, guys. If I was trading the SPYs, even if I traded on the 15-minute chart, and I don't even use the 15-minute chart. If I was trading the 15-minute chart, guys, what direction is this VWAP, this white line? What direction is it angled, guys? This is the VWAP. This right here, guys, is the VWAP, this white line. What direction is it pointing? Down. It's pointed down. So guess what? We were short all day long. Guys, we were short all day long. And if you didn't know to be short all day long, you need to add the VWAP. Now, what's crazy is that we got caught up in this period right here. This period right here, I was short just like everybody else. Everybody in the group chat We were all short the market from like 9:45 to about 11. But look at what the market did during that time. It would not push to the downside. It just wouldn't. It just wouldn't push. And y'all know my philosophy. Y'all know my philosophy with intuition and luck. I like Marky Mark's statement. With intuition and luck, I said, guys, I tried the short. I tried the short. It's not pushing. The market's not pushing. I don't know why. It's been pushing every day. It's not pushing. It's not pushing. But when it finally broke, it broke at 11 o'clock. When it finally broke, guys, everybody knew what direction it was going to continue going in, because the VWAP had been angled down on a lot of the charts all day long. So you should have known to be short or to not take any long positions. Or if you're taking long positions, if you were trading the what would Joe do method, in the comment section, if you're trading using the what would Joel do method, when is the only time Joel will go against the VWAP? What is the only time I will go against the VWAP and go long, or I'll go short? Now, mind you, I don't go short when I see this, but when will I go against the VWAP? Does anyone know? Does anyone know? Arwen's been taking notes. You have to have a RSI that's oversold. We talk about the RSI every day. If your teacher or wherever you learned how to use the RSI, which stands for, in the comment section, what does RSI stand for? What does RSI stand for? The letters R, S, and I. What does it stand for? If you don't know, this is Technical Tuesday. On Tuesdays, if you never learned how to read a chart, all day long today we use the technicals. And then whatever we learn today, even if it's a new technical tool that one of you guys suggested that we use it the whole live. So I walk in on Tuesdays, guys. I know we're going to talk about the technicals. I usually never have any idea what we're going to talk about. RSI stands for, there you go, Relative Strength Index. Relative strength. That's the strength of this move. Relative strength. Strength relative to the market. This is strength relative to the market. When it gets oversold, you're going to see blue lines. If you add it on your charts, if you're smart and you add it on your charts, you're going to see it look like this. Oops, hold up. Let me take this off. That's not how it's going to look. Sorry about that. Hold on. Let me take that off real quick. I'm going to take the TTM squeeze off. It's gonna look like this. Now watch this, guys. Watch this. Even if you're wrong, the RSI oversold with a trend line break usually will go your way at some point. So when you use it, guys, you guys got to be really fast. You got to be really good at putting your stop at break even. A stop loss, guys, is when a stock goes down, or a futures or whatever you're trading. If it goes down in value and you have a stop in place, it will sell it for you. Anytime you see something go oversold, like right here on the RSI, all I want for you guys to do is add a trend line. If it breaks that trend line, buy. Because you might have just caught the bottom of the market. Now, here's what's crazy. For 30 minutes, you made money for 30 minutes. Most of you guys only need to make money for 5 or 10 minutes. The spiders went up in value for 30 minutes. because this is 15-minute charts. Remember, I don't trade the 15-minute. I'm just pulling it up today just to give you guys something to look at on a broader basis. So when it broke this trend, it went up, but it couldn't keep that momentum to the upside. In fact, it came to this 10-day moving average, and then it reversed back down. And then guess what happened, guys? Watch this. All that was a fake out. All that was a fake out, because look at this. You got another RSI. The RSI went off again at 2 o'clock. Now that's great. You want to see the relative strength index go off at like the 10:30 period, or you want it to go off at the 2 o'clock period. Why? Because the 10:30 reversal is a real thing. The market will push for an hour and then reverse at 10:30. And I tell people this statistic all the time, and they never believe it. Do y'all know only 1 out of the 5 days during the week? Most of you guys get into the market at 9:30, and then you sell at 4 o'clock. Do y'all know only 1 day on average a week, the market actually, if you bought it at 9:30, it will just continue to go higher like all day? Or if you short at 9:30 and it goes down the rest of the day, you only get a market that does that 1 day a week. Y'all know that only 20% of the time will you get that type of trending all day move in one direction. And I know, and I get it, because you know, it goes against the statistics of what the market actually really does, because the market actually trends 80% of the time to the upside, 20% of the time sideways to down as an investor. But as a trader, intraday, you only get one good, and that's why people that put trades on at 9:30, they struggle. The market could have gone up 800 points today and back to the same price you bought it at 9:30, and you didn't even know that the market would have had one of the biggest moves to the upside and downside. So stop trading 9:30 to 4. Either trade from 9:30 to 10:30, trade from 10:30 to 12, trade from 12 to 2, or trade from 2 to 4, in my opinion. In my personal opinion. All right, pick one of the 4 or pick 2 of the 4, and then check yourself after that time period. If you haven't taken a trade by 10, guys, if I haven't taken a trade by 10 or 10:15, I'm chilling and I'm waiting for that 10:30 reversal. Once 10:30 hits, or even close to it, doesn't have to be exactly 10:30. If I see things going oversold at 10:20, I might say, all right, let's look and see if this 10:30 reversal is going to happen. If the market starts to trend in the opposite direction, we go oversold, I might take a trade. Now listen, at 2 o'clock, right around 2 o'clock, getting ready for that 2 to 4 o'clock period, the market went oversold again. So guess what? It might not have worked that first time, but that doesn't mean it ain't going to work the second time. Now watch this. You're going to do the same thing. You're going to throw a trend line on that bad boy. You're going to see where the VWAP is, because your target is going to be that VWAP. If the VWAP is right there, then you're not going to take it. But look at how high the VWAP is. The VWAP is so far away, there's a lot of money to be made. So once it broke that trend, I don't know if it worked, but look at there, guys. Look at that. 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 You got you a nice little rip at the end of the day after the market went oversold. We talk about this every day. What if I told y'all? What if I told you? What if I told you that everything that I'm teaching you guys, or if not teaching you, because I don't want some of you advanced traders to come in here thinking that little old Joel taught you anything. You've been in the market for 37 years. What if I told you that the way that I trade using my BTG setup, it doesn't matter what time frame you use. It's the same setup every time. It doesn't matter what chart I use. If I want to use an hour chart, I'm gonna do the same thing. If I'm gonna use so listen, the what would Joe do method is all about momentum. All right. The only time I go against the momentum is if I see an oversold condition. I don't look for overbought conditions. So I don't care about the RSIs to the upside, guys. I could care less. I could care less about the RSI to the upside. Because what I've noticed is that when the market goes oversold, it's very like short sellers really like to short the market, guys, because when the market sells off, it's a saying that we take the elevator down and then we take the stairs up. We take the elevator down, but we take the stairs up. So I don't do RSIs to the upside because a lot of the time when that FOMO kicks in and it just grinds up, it just grinds. It just keeps grinding up. Like, that's why I hate being if I was a short seller, I would hate to be a short seller at overbought conditions. Because you guys would hate the market. You've been hating the market for the last ever since 2008, 2009, the market's been grinding up. That's why it doesn't pay to be that type of short seller. If you want to be a short seller like me, wait until you see moving averages that are angled down. If you see moving averages angled down, for example, can somebody give me a stock that was down today? What stock was down, or what stock was up and then maybe down? I don't care. Like, just give me a stock. Somebody give me a stock. Any stock. Any stock. Nvidia. Let's look at Nvidia. Let's say you wanted to trade Nvidia today. I have no idea what Nvidia's chart did today. That's why I love doing sessions like that, because it puts my strategy to the test. I call this the magic show. Every so-called guru who has a strategy that they're trying to teach the masses, in my opinion, you should be able to pull up any stock, any futures, any crypto, any Forex, any chart, and the strategy should stand. And I stand by that. I say, look, guys, you can put my strategy to the test at any time, at any moment, on any stock, as long as that stock is $1 billion or higher. All right. So let's pull up let's pull up Nvidia. So we're going to look at Nvidia, and I'm going to show you guys how it works no matter what time frame you're on. Now, we're going to go from investing all the way down to whatever it did intraday trading today. All right, so watch this. If you were trading if you were investing in Nvidia, the people in the comment section, what is that yellow line doing, and what is that yellow line? We're gonna go from the top down. What is that yellow line? If you ever come to my lives, you're gonna see this yellow line. What is that big old yellow line that you see? What is it? I'm not looking at an anchor VWAP, Davio. Oh, you said, where do you anchor? You're asking me, where do I anchor my VWAP? I don't clearly understand that question. If you can answer that question in another way, I'll try to answer that for you. So Arwin, this is the 200-week moving average. Do not get the 200-week moving average confused with the 200-day moving average. You got a 200-week moving average, which, think about it. What is 200 weeks? 200 weeks is 4 years. Is it? Yeah, it's 4 years. So imagine if the average price of a stock has been going up for 4 years. This is why it's so important that you look at the stock that you're thinking about buying, guys, because if a stock average price has been going up for 4 years, 5 years, and you look at a chart and it's like a 10, 15, 20-year chart, and you just see buying, This tells you that no matter what this company does, people are just going to keep buying it and buying it and buying it and buying it higher. And this is what you call growth companies. Okay. Anytime you start going past 45 degrees and it looks like it's flirting with it, Nvidia's flirting with it. Now the chart is a little, let me zoom the chart in a little bit. The chart is getting a little parabolic, but if you look at it from here, guys, you want a stock. This is when I tell you guys about the perfect stock that you can ever buy. This is the test. You always go to the bottom left. You always go to the bottom left part of your screen and you draw a trend line to the top right of your screen. This tells you if you should not short a company like this. Y'all see that? That is what you call the perfect optimal angle of a growth stock. When you can go to the bottom left and go to the top right, and it follows that line to a T. And we're looking at, right now, we're looking at 2 years worth of information. You have what we call a perfect stock. Perfect. When that 200-week moving average is angled with that 45-degree angle, this is the type of stock you own, guys. You don't short it unless you're intraday trading. Like, you don't, just because Michael Burry hates the stock, you don't come in and short things like this. This is how you destroy your portfolio. Okay? This is how you simply destroy your portfolio. So you're going to stay away from that. Now, the best time to buy, well, I would say the best risk to reward for any company that you're buying, if you're investing, if you can get anywhere near that 200-week moving average, guys, you're talking about one of the best investments you can possibly make. Look at this, guys. This was 2022. Do y'all see this? Do you see this? We came down, touched the yellow brick road. What do you guys notice? This is the same setup that we do on the VWAP when you're intraday trading. All right. Not only did it come down in price, it looked like it wanted to go oversold. It didn't quite do it, but it broke this trend line. Joel would have been in somewhere around here. That's the what would Joel do method. He's going to use a moving average. I'm going to use a moving average from my bias. My bias is going to be a moving average. Here it's the 200-week. My trigger is going to be the break of that trend line or an oversold condition. It touches that 200-week moving average. It breaks that trend line. That's going to be my trigger to buy. That's my trigger. And here's the thing, I ain't even going to talk about our goal because the goal is going to change depending on who I'm talking to. Right now, this is the two most important things. Goal will come. My goals change. Sometimes I'm looking for a 3x. Then it gets there so fast, I say, well, dang, maybe I can get a 5 or a 10x. Then the 10x comes so fast, I might have to sell some of it and wait for a 20, 30, or 40x. I got a 4,000% return in this company as we speak right now. 4,000% return. Now, I'm going to show you guys when I bought it. Now, I've been buying this stock over and over again since 2016. This is when I bought it. Look at this, guys. We got near the yellow brick road, but I did something that I normally don't do. I bought it right when it was about to touch the yellow line. Now, why did I do this? I'm going to tell you why. The volatility index went above 50. The VIX. We'll talk about the VIX later. The volatility was greater than 50. Anytime I see The volatility index. Where's the greater than sign on this computer? What is it? Is it at the one? Where's the greater than sign? In the numbers? Where is it? For you computer geeks, where is the greater than sign? I don't see it. Help a brother out. Where is it? Where's the greater than sign on this computer? I still don't see it. I done looked at every dang character. I guess it ain't here. This needs to be a Mac. Hold up. I see that. I don't see the greater than. I see the plus. Oh well. Wait. Oh, I think I see it. Nope. Oh, wait. I think I see it. God dang it, that ain't it. Oh well. Wait, at the bottom comma? Whatever. Wait, where is the greater than sign? Anyway, when the VIX is hot, we're just gonna put a plus. When the VIX is greater than 50, when the VIX is greater than 50, that's the volatility index. That's the fear index. When fear is so high, guys, that it's like on a Richter scale, like a 9 or a 10 on the Richter scale. You guys know if an earthquake comes and we get a 9.0 earthquake, that means the whole city is destroyed. When you get a 50 or higher, guys, that stock has gotten obliterated so much that it doesn't even make any sense. I want you guys to think like 2008, 2009, when you looked across the street and your house was 70% off of, the value. If you bought a house for $300,000, you looking across the street and they selling that house for 50 and you pissed. Because you're like, dang, I want to buy it for 50, but I ain't got 50 cash to buy it. Republicans love those periods. We talked about that yesterday. The last 10. Somebody put a statistic in the comment section. If you don't know this, the last 11 recessions, like the last 11, if you go backwards for the last 11 recessions, 10 of them started during a Republican administration. Now, the next question that everybody was asking was how many of those 10 or 11 who was in office at that particular time. So it was split. Out of the 11 recessions, out of the 10 recessions, it was split. No, it wasn't split. 6 of them, it was still more Republicans. Do y'all know that there were 10 out of the last 10 out of 11 recessions, 10 started during a Republican administration. And out of those, 6 of those, there was a Republican prior to that. So 4 of them Democrats was in office. So it was split. So, you can't even say that it was the Democrats that caused the recession. Because half of them, Republicans were in office when the next Republican took office. So, you need to understand that when Republicans are in office, you can say what you want to say. Remember, I'm an independent, so I get to say whatever I want to say about each party. I can make Democrats mad, talking about Sleepy Joe, or I can make you Republicans mad, or MAGA, or whatever the heck y'all call yourselves these days. But that's important so that you know next time you go to the election, whatever, you know what you are electing. Now, the stock market usually does well. I know you guys are like, why would the stock market do well during a recession? Because stock markets bounce back fast. Everybody wants a recession. I know you guys are like, what? Yes. People that have a lot of money want recessions to happen. They want things to flourish. But then when things start to go down in value, they liquidate their assets. or not liquidate their assets. They liquidate speculative stuff. So what does that mean? That means think like a rich person. Everybody right now, we're going to put on our rich hats. We're going to put on our hats. We're going to put on our crowns. And we're going to imagine what the world would be if we were in the top 1%. If you were sitting on billions of dollars and you saw that your billion-dollar fortune was about to go to 500 billion, what are you going to do? Well, what most people do, guys, is they're going to cut off anything that's speculative, any type of venture that their kids are doing or family members are doing, anything that they're doing with play money. Oh, you wanted to go start a live golf tournament. We're going to cut off all of those funds and we're going to keep the core. When you cut those funds, I want you guys to think like rich people, because y'all don't do this during a recession. Y'all start crying and you never want to buy anything. You got to think like the rich. When you start cutting off all the fat, you're going to have a lot of what we call powder. You're going to have a lot of cash to do whatever you need to do with it. So during recessions, what a lot of people will do is they'll keep their core stocks. They'll keep their gold, they'll keep their silver, they may keep their oil, they'll keep their Apple, Amazon, Microsoft, Google. What are they going to cut? They'll cut their cannabis stocks, they're going to cut anything that's speculative. And then they're going to look for either great deals or they're going to look for high beta situations. When this recession happened, guys, in 2000, this wasn't like the recession in 08, 09, but 2022 was really, really bad. I want you guys to think like the rich. At the time, NVIDIA was still known around the world as one of the best companies on the planet. Well, one of the best companies on the planet, guys, that actually have some speculative properties, meaning this ain't one of them stocks that just go up 10 or 15%. You're talking about one of the best companies on the planet that can give you a 300 or a 400% return when everything gets back right. So, in 2020, that was 2022. My fault. Let's go back to 2020. So during COVID, which is right. Oh, that was right there. This is COVID, what you're looking at right now. Why did Joel buy NVIDIA? I just explained to you guys why. Because once I started liquidating my portfolio, and I said, oh man, I'm losing money, but I'm going to keep all of my core companies. At the time, I didn't have a full position in NVIDIA. I didn't have a full position in a lot of companies. At that particular time, cats was selling their Bitcoin. They was selling everything. So when the volatility index went above 50, I went out and I said, what is the best company on the planet that has the highest beta? Hands down, you could have either picked Tesla at the time, or you could have picked a company like NVIDIA. They were all in the top 10 to 15 at that time. So all you got to do is look at the top 15 list. Which one has the most beta? You literally can just go to Yahoo Finance, guys, pull up beta, whoever got the biggest number. NVIDIA has always had a 2.0 or higher beta. That's why it's such a phenomenal company. Because Cass is like, how can this company keep growing at this particular rate? How can this company be the largest company on the planet with a, guys, that's unheard of. To be the largest company on the planet with a 2.0 beta? That's like unreal. That's like when you were out there dating and you found that girl or that dude and they had face, they had chest, and they had and they had brains. When I see that, I'm like, you getting married. that took me out. I was like, I'm getting married. Shoot, this is rare. You don't ever see nothing like that. You're like, hold up. Does anybody know? So that's why I bought it. Look at what it did. It don't matter what it did. I'm up 4,000%. That's in a 6-year period. And it wasn't that it wasn't on anybody's radar. Everybody knew that Nvidia was the best company or one of the best at that time. And if you believed in technology, they were the technology center. They still are the technology center. What did they just say in the last couple of days? Somebody put in the comment section what they just put together. Nvidia is going to be around for the next 100 years because what they're doing is they're establishing a position in the world where you can't supplant them. Because in all honesty, guys, it's kind of like they got a monopoly, but they learn how to monopolize. They're literally playing Monopoly. It's the craziest thing I've ever seen. Because you're supposed to not have a monopoly, but they're playing Monopoly. They're like, oh, okay, we're gonna outsmart the antitrust laws. And we're gonna do everything legally, but we still gonna have a monopoly. We don't just want a monopoly on this one thing. We want guys, they want a monopoly on technology. How the heck you got a monopoly on technology? They figured it out. They figured it out. This is what's going on right now. They just developed, and that's just the beginning. They didn't want to hit you with a trillion yet because they know what a trillion will do mentally to you guys. 500 billion is still ridiculous. They're like, okay, you guys ain't got the money yet to pay us. Think about what they just said. They're like, all right, we're going to build all these data centers in space. We're going to build data centers everywhere. We're going to put data centers on Mars. We know y'all can't fund it yet. So what we're going to do is we're going to create a bank so that all of you guys can get funding. You don't even have to go to a bank to get the funding. You could just come to if you're in our ecosystem, you're going to get funding so you can pay us. What? It's the most gangster thing I've ever seen. It's the most gangster thing I've ever seen. I'm like, these cats is trying to put a monopoly on technology. They got a monopoly on technology. They're like, yeah, we're not in healthcare. We got a monopoly. And this is just the beginning. We ain't even start talking about quantum computing yet. They're gearing up for that. So this is what's happening. So that's why I tell you guys, you got to own this stock. You can't stop shorting it unless you day trading it, because you just going to lose money. Like, look at what this chart did. You see where I bought? I'm going to show y'all where I bought it at. And I bought it way down here at the lows, guys. That's what's funny. I bought it at the bottom of that candle. That's where I bought. Look, it went off the screen. it went off the screen. You think I'm selling that? Heck no. But look, we done hit the yellow brick road again. That's how low I got in. I got in way down here. Now they did do a reverse stocks. They did a stock split. So just imagine I got in the $4 range. It's at $200. Now it wasn't $4 because back then it wasn't $4. They did a reverse. They did a stock split to fool you guys. They tricked you guys into thinking that this stock is cheap. Because if you really knew if they had never done a stock split, their stock price will probably be like $20,000 a share. They're like, if our stock price was $20,000 a share, nobody would buy it. So we need to do a stock split. So if you did the adjusted stock split, it's like I bought it at $4. That means I'm up 50 times my money. This don't even make any sense, guys. $1,000 would be worth 50 grand. $10,000 would be worth 500 grand in 6 years. That's unheard of. What? $100,000, you got cats running around here with $5 million in their pockets. Why do you guys think I'm trying to get to that level where I can put 100 grand in something? I'm getting close. Getting close. So check that out. It hit the yellow brick road. It gave you another opportunity to get in 2022. So you had two opportunities to get in the best company on the planet. Hands down, I didn't need 57 indicators to tell me when to buy the best company on the planet. All you needed was the yellow brick road. That's it. Do you buy it when it hits the yellow brick road? I will say this. If the volatility index is above 50 and it's hitting the yellow brick road, it don't matter what stock you buying. If it's in the top 20, top 50, chances are it's going higher. If the yellow brick road is angled up. All right. So use it. But you got to be patient because we don't hit the yellow brick road often. There was a company that was in the top 20 that just recently did this. And I kept telling you my stories about how I had a 4,000% return. I done told you 75 stories. I done showed y'all several statistics. I done showed y'all receipts. And then I said, hey guys, this is resembling the same thing. I said, you should buy. The yellow brick road is right there. The company has been in the top 10 for the last 30 years. You're struggling making money as a trader. I said, so if you're struggling, why don't you do what I do and buy something that's actually going to go up? Get your statistics up. Get them statistics up. I said, you know what, guys? Here's a freebie. Go buy this. Top 20, hit the yellow brick road. How many of y'all bought? About 3 of y'all? 3 of y'all bought when it hit the yellow brick road? What, 3 of y'all? About 3 people bought. I told y'all to buy. Y'all know how much I'm up already? 40%. Joe, you just bought it and I'm up 40%. Y'all trying to get 40% in your little penny stock you buying. I bought Microsoft. Told y'all to buy. It wasn't because of how I felt. It wasn't because of my intuition. It was simply because the technicals have told you for years what to buy. So when you guys are like, well, Joel, if it's that easy, why isn't everybody doing it? Well, you got to ask the room that question. If you got 108 people on right now, everybody knows that the 200-week moving average, especially for a top 20 company, if a company gets down there and you see it break the trend, you got like a 90-something% chance that it's going higher. You got to ask the room, why didn't they buy? Because statistics say that 90% of the world is just not going to make the best decisions. Only 5 to 10% of us are going to be able to take this trade, and we'll take this trade consistently. It's only allowed for 5% of us, guys. So are you a 5%er, or are you in the other 95% that tries to do your thing on what you're doing on your support levels? Sometimes you might be right. Sometimes you might be wrong. I want to be right with the world. I gave up on creating my own support levels, and I make jokes about it, but it's real. I gave up on my support and resistance lines because nobody gives a damn about my support line. I kept trying to do lives. I thought maybe if I draw these areas down here, Wall Street will pick up on it and buy it at those levels. And Wall Street was like, nah, 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 nah. You got a little bit of cheese, Joel. Your family got a little bit of cheese, but nah, you ain't no billionaire. You ain't got 100 million. Why should we look at your support levels? So I said, bump it. I'll just join. Just tell me. Just give me a call. Just give me an alert and just tell me when y'all buying. They're like, cool, we got you. Since you've been around for all this time, Joel, we're going to allow you to be you're not in the top 5%. We're going to make you in the top 6%. I'm like, great. So buy. You got a very, very high chance of buying this. Now, we spent a lot of time with the investing side because investing is where you make your wealth. I know you guys want to be traders. Trading is so fun. Trading is fast money. I want my money now, Joel. I don't want to wait 5-10 years. I don't want to wait 6 years to get a 50 times my money. So you should be doing all three. So you can enjoy all three. You can enjoy being an investor. You can enjoy because there are going to be times, guys, where like in 2022, your investing is going to suck because 1 out of 5 years, the market will go down. We call it a bear market. 1 out of 5 years, you're going to see a whole full year where the market goes down. The average bear market lasts 344 days. You don't believe me? Pull it up in chat. I don't care. Fact check me. Joel, in fact, it's 345 days. Why are you telling people 344? Well, I'm glad you looked it up. So what does that mean? That means, hold up, Joel. Say that again. You mean to tell me that if there was a 5-year period, on average, one of those years is down? I'm like, yeah, we call that an investing year where you need to start loading the boat. Why? Because the next 4 years is usually up. 4. I know you guys are like, hold up, 4 years, Joel? We haven't seen a 4-year run. You just felt a 4-year run. It just doesn't feel like it to you because you ain't made no money. 2022 was the last what we call bear market, or the most recent one. And we ran for 2023. Market was up over 20-something%. 2024, market was up over 25%. Wait, what did I say? 2023, 2024, 2025, market was up more than 25%. This is year 4. We're up like 18%. You just saw a 4-year run. And y'all know what I was telling you guys back in 2022? You better get ready for this 4-year run. And you know what everybody said? No, so-and-so's going to get in office and so-and-so. And I'm like, have you not been looking at the statistics? Have you not been looking at charts? That's why this is Technical Tuesday. You're going to stop listening to people on TV. This is the polygraph. This is the real deal. The charts don't lie. Only people and traders and investors lie, or give opinions, or give how they feel, or great salespeople on thinking that something is happening when it actually isn't. You got presidents talking about, we're not at war. We're not. The first 2 weeks of the war, we're not at war. We're not at war. Like, you got to be, and I'm just laughing because I know there's a bunch of people taking up for you. Joel, why are you telling everybody that we're at war? If the president says we're not at war, we're not at war. We're just in a situationship. And I was like, oh my God, what, you've been watching the Will and Jada tapes? When you sent a bomb over there and killed The whole top 20 of the Iranian government, we was at war. No, Joe, we're not at war. I lost viewers because y'all know I lost viewers because of that. Because I kept saying I lost followers. Because I was like, what are you talking about? Because people love their president so much. If I say anything, well, look, my live gonna get cut off again. Same thing when Biden was in office. I was trashing Biden. I was losing friends. Joe, you must be a Republican. Why? Because we ain't seen Biden in like a year? Because I'm calling it how I see it? Like, y'all gotta quit being freaking, y'all need some spines, y'all. Like, so what? If they cut off the live, guess what? I'm gonna come right back on. If they cut off this live, I got 3 other accounts. If they shut that down, I'll go to Facebook. Who cares? Sometimes you got to, I don't care. Say it with your chest and how you feel. It's only going to make you a better trader and an investor. It just is. You got to accept reality for what it is and quit. And you spineless folks, listen, one thing that Trump did that was good. The best thing Trump ever did was he exposed every single solitary hole in the government. And that mug is porous. I didn't realize our government was this porous until Trump came into office. That mother sucker is exposing that joker said, I'm trying everything. Y'all got this. He's like the tush push. He's like, I'm going to do the tush push until y'all stop this mug. You can cry. You can say whatever you want to say. I'm going to keep running this play until y'all stop it. And I got to respect that fool for that. He said, this weak government, I'm about to do insider trading. I'm about to charge. Guys, we went over this yesterday. This is the funniest thing I ever seen. This joker is charging $100,000 a month so that you can get his Truth Social posts before everybody else. $100,000, and Katz is paying it. Sure. You sure this is okay? He's like, yes, okay. I'll just pardon you. Paid $100,000, you're guaranteed a pardon. Make 10 million, you're guaranteed a pardon. You might get into some legal woes, but it's gonna be alright. I got you. You see this porous government, these weaklings, these spineless fools, they ain't even calling me out. My own party ain't even calling me out. I'm doing whatever I want. We ain't at war. I won the last election. Like, get the F out of here, yo. It's the funniest thing I've ever seen. I'm laughing. It's funny to me. I'm like, y'all can be in denial. I'm a not be in denial, and I can laugh all day long at this crap. It's hilarious. It's hilarious. And for the next, I don't ever want any family member to ever get taxed on anything ever again. What? I'm like, what? He thinking of stuff I would have never thought of. Dang, that is kind of dope to never ever have to, never even ask. Never even have to file. I never have to call up H&R Block to do my taxes. That's pretty cool. Hey, if they gonna sign off on it, if these spineless individuals let you do it, then do it. I'm just sitting back watching like this is some funny. It's some funny TV, and I'm like, well, what else? What are you buying next, Mr. President? so we can all make money. I'm gonna do it the legal way though. What we buying now? What government contract you gonna give to a family member this week? Put that on the list. Drone company. Buy 1,000 shares. This mug is hilarious. It's holes everywhere. Now let's get back on subject. So that's why you gotta look at the charts. You gotta look at the charts. Look, even if we pulled up his stock, I'm telling y'all right now, I'm being honest. I'm trying to be as honest as I can. If that chart, if DJT looked like Microsoft, oh, I would have bought some. And I would have been like, so what? What so? If he gonna make money, I'm gonna what? Not make money because I don't like him? Do you know the best thing on the planet is to make money when your enemies are making money too? Like, I'm gonna not make money while he make money? Like, does that make any sense? That's how y'all be thinking. F Elon, F Trump. So you don't want to make no money in the things that they're pretty much telling you to buy. Okay, whatever. He gonna be gone in 2 years. You gonna not make a fortune for your family for somebody that's only gonna be around for 2 more years, and then he gonna be gone. Whatever. Get out of my face with that nonsense. This is DJT stock. The guy, if you're buying this, you are an idiot. You don't know how to buy. But the president's gonna protect me. No, he's not. This is how you make money off the people that support you. That's the funny thing. That's what I'm dying laughing at too. I'm like, this joker became a billionaire off his supporters. He created a meme. He was like, I'm gonna help you out. He created a meme coin. Y'all bought it. He made more money than he's ever made. You ain't make nothing. He's sitting back laughing. He laughing. I'm laughing. Everybody laughing. You ain't laughing. It ain't funny, is it? Told you this is gonna happen. Y'all in denial. Let the man do whatever he want. Let him do it. If he gonna do it, I'm gonna watch and laugh. It's the most funniest thing I've ever seen. Love when Saturday Night Live come on. What else would they have jokes about? The 200-week moving average is angled down, guys. The company's been going down in value since it came out. Let's look at the history of this money-making scheme that you guys continue to invest in. The funniest thing I've ever seen. No, it's gonna come around. He's gonna protect us. He's gonna protect us. No, he's not. That dude is trying to protect his own butt right now because he about to lose the freaking house. Do y'all know if he loses the house, do you know how fast? By January, guys, you gonna see the most lawsuits y'all ever seen in your life, and I'm gonna be sitting back laughing again. This cat about to lose the house. Is it the House or the Senate? Which one is he about to lose? Whichever one he's gonna lose, it's gonna be lost. It's gonna be so many lawsuits we ain't gonna be able to follow along. And I'm gonna be sitting back laughing. Hilarious. But hey, he got billions of dollars to spend. Hey, he got billions of dollars to use on lawyers. Y'all helped him out. Stock went from 175 to 6. Technically, what do you guys see in the charts? Technically, this is not what we call a bottoming out process. I know you guys think it is, but look, this is a circle. This is a lower circle. That's not good. That is awful. Now, if that was bottoming out and you got them bottoming out right in the same areas, I can see you maybe trying a double bottom at $11. We're at $9 now, so it has run from 7 to 9. So if you're an intraday, if you're a swing trader, let's see if there's a way to swing trade this thing. All right. So we're talking about DJT stock. All right. MAGA's favorite stock. The stock that has made you wealthy. Let's talk about this stock. All right. Investing wise, we all know to stay clear from this stock because he gonna be long and gone, and really the only time to really make money is gonna be during the time that he's in office, because he's gonna get exposure when he's a lame duck, or when he's out of office. He's still gonna be Trump, right? He's still gonna be able to move the market. He's just not gonna be able to move the market like he's moving it now. So in my opinion, the best time to make money on this stock is you only got about 2.5 more years if you're going to make some money off of it. Or they need to do something where they're exposed to energy, and that's probably the play that they may try to make. I think I heard them trying to do that. They're trying to go into crypto, trying to go into energy, trying to go into something. And because he's putting a lot of things in place, it might be bottoming out right now. I don't know. I don't care. Well, I will care if I start seeing that 200-day start to angle up. So if I start seeing it angle up, which I don't see, the 200-day is still angled down, you're not going to see Joel around. I am not touching a stock with a 200-day and a 200-week moving average angle down. It's just I like money, guys. I'm not gonna just not make money. Like that's dumb to me. Maybe if it goes oversold, there were oversold conditions on the RSI. If you notice right here, we went oversold. If you see an oversold condition, you could take a shot at the stock. It went oversold. If you were using the what would Joel do method, all you're going to do is you're going to draw one trend line just like this. Once we break that trend line, take a shot. Take a shot at it. That might be the move that you're looking for. DJT went from $9 all the way to $10.50, and then it turned around and it went all the way down to $7. So I would have bought it here. You would have had a 1 day, 2, 3, 4, 5, 6, 7, 8, 9, 10. You would have had a 12-day period where it went up in price, and then it broke that trend, went right back to lows. It was a pump and dump, just like it's always been. There's nothing in this chart that's telling me to buy. Now, here's the thing. What you terrible investors will do is you have FOMO, like you really want to buy the stock. You really want to own it. You really don't want to miss out on it. Because humans, for some odd reason, thinks that stocks is a 1 day or a 2 day event. And if I'm not there for that 1 day or 2 days or 1 week or 2 weeks, I missed out on the whole move. No, you haven't. You actually want those weeks and days to happen. Right? You might get a pop in a stock. We call that gambling. Like somebody might come in. Trump might make somebody buy the stock. We don't know what's happening. You might have a bunch of people come in. They manipulate the price for 2 or 3 weeks. And then everybody's like, ain't nobody buying this crap. Right? So you want to see whales come in. You want to see volume come in, and you want to see it stabilizing. That's not happening. It ain't happened for like 3 years. That's why nobody cares about this stock. You'll have pops and drops. So it's great for 10, 15 days swing trades. That's it. That's all this company is used for. Swing trading. That's it. Nobody should be investing in it unless you're thinking 30 years down the line. If you got some little MAGA babies and you want them to make money off of this company in 15 years, then buy it now. All right. So, it's at the 200-day moving average. 200-day moving average is angled down. Why you had to call them MAGA babies, Joel? Why you had to say it with that tone? You said that you remain neutral. My bad. I shouldn't have said it with that type of tone. All right. I probably lost some more followers. This is the 100-day moving average, angled down. All right, let's go back to NVIDIA. Let's go back to the greatest. We just looked at one of the most terrible companies. Let's go back to greatness. Let's go back to greatness. Now, here's the week chart. Y'all know I didn't brag. I didn't told you where I bought it at, right? Everybody knows I got a 4,000% return. You could have come in and bought it right here, guys, in 2022. If you bought it in 2022, do you know what percent you would be sitting on right now? If you bought it in 2022, 4 years ago, instead of 6 years ago, you would be sitting, what price are we at? 217. You would be sitting on a 1,300% return. So for people who don't know what 1,300% is, that's like $10,000 going to $130,000. That's like $100,000. That's like buying a house for $100,000. And in 4 years, that $100,000 property is now worth $1.3 million. That's what you missed out on. And everybody, when I say everybody, knew that NVIDIA was one of the best companies on earth in 2022. Everyone knew. Okay? That's why you're getting educated in here now. How do you know if a company is the best? What do you look for, guys? How do you know if a company is the largest company on the earth? Which translate into one of the best companies on earth. What do we look for, guys? Tell the people in the comment section that just came in. How do you know if you're dealing with one of the best companies on earth or the largest companies on earth? Shanice told you, you got to look at the market cap. How else are you going to know? You're not going to know, guys, looking at the stock price or the crypto price. You're not going to know how big it is in relation to everything else. Bitcoin, whether you hate it or not, is one of the best assets on the planet. Why? Why is Bitcoin I didn't say it was one of the best businesses or the best why is it one of the best assets on the planet? What is Bitcoin worth? What is its market cap, guys? Because y'all think it's worth $60,000. It's not worth $60,000. There's a bunch of people that paid $60,000. Imagine all the people that paid $60,000 in Bitcoin. The numbers start to grow then you start to think, well, hold up. It can't be worth zero because I know Joel personally put 50 grand in it. What is the market cap of Bitcoin? How do you find it? You find the market cap. Hold on, my thing's not working. Having all types of issues today. No, not as store of value. Everybody wants it to be a store of value. It don't even have to be a store of value. It's over $1 trillion, guys. Most of y'all don't know this. Most of y'all had no idea that Bitcoin's market cap was up there. At one point, I think Bitcoin and Tesla have the same market cap. And that's not because an appraiser came out and said, you know what, because of the blockchain and how it moves and the amount of people that are using it and the amount of money that's going in, I believe with an educated guess that Bitcoin should be worth about 1.3 trillion. No, it's worth 1.3 trillion because it's worth 1.3 trillion. You can't have a market cap like that if money is not invested and circulating in it. Now, because the man created assets like stocks and crypto and this other type stuff, unfortunately, guys, and I just learned this recently, Even being a guru, guys, I just learned this recently. I'm like, how can a company be worth 1.3 trillion unless there's 1.3 million dollars circulating? I honestly thought the only way that it can get that value was that every coin that was available, if you attached it to every person that bought it, that every dollar one for one was going to make it 1.3 trillion. Do y'all know that whales can manipulate the market cap? If a whole bunch of whales start buying it, they can manipulate the market cap. That's what's happening, in my opinion, in SpaceX right now. SpaceX has a market cap of like $1.5 trillion for a company that that doesn't make money. I actually thought that it was $1.5 trillion. Like if everybody went, because here's the thing, if everybody decided to sell today at that price, you're not going to be able to do it. Which is what brought the whole real estate market down in the first place. Leverage and margin. And it's a brilliant thing that they've done, but it's never been one-to-one, which is funny to me, because our whole lives, the way that we trade, the way that we invest, we're always thinking one-to-one, and the market is thinking 1 to 1,000, like all the time. That's why y'all should never think that you can't make 1,000% return in something. Like, it's still hard for me to believe that Nvidia is worth $5 trillion. For so long, we never even reached a trillion. Now we at 5 trillion. Elon then came out and said SpaceX, and we'll pull up the chart. He then came out and said SpaceX is going to be worth 30 trillion one day. And what do? We all start laughing. Like, boy, what you talking about? And he's like, have I been wrong yet? You said Tesla wouldn't be worth $1 trillion. And it got to 2 trillion. And I was in it for the whole ride. That's when I became a believer. I was like, guys, these numbers that they're throwing out, I know it seems obscene to you. You better get comfortable with it. If you want to be a millionaire, you better want 10 million. You better get comfortable with these large numbers, because these large numbers is the reason why you can't make money, because you feel like you can't make it until you meet somebody like me. And you're like, and you see a 4,000% return, and you're like, hold up, let me do the math. You mean to tell me I'm speaking for you, I got $10,000. You telling me if I had $10,000 in Nvidia, it'd be worth $130,000 today? I'm like, yeah. If you bought it in 2022, if you bought it during COVID, your $10,000 would be worth 400 grand. That's the number that you guys are like, whatever. Hey, ain't nobody out here putting 10 grand in something and it's worth 400 grand. Okay. Keep telling yourself that you can't make that type of money when the numbers don't lie. The numbers don't lie. Guys, SanDisk was up 4,000% in the last year. I think it's at 2,000 now. SanDisk went up 4,000% in 1 year. Micron went up 1,000% in 1 year. Yet you guys want to put your money in CDs. Nah, Joel, I'm cool with 3%. 3%? This company just gave out 1,000%. So you're willing to take 3% because you scared to make 997%. Keep being scared. The market is paying out people in companies that y'all use on an everyday basis. It's just that you're not conditioning your brains. That's why we do things like this. You got to start conditioning your brain and seeing it. Because when you see it and you're like, hold up, I could have done that. That's why you have to be an investor. If you're a trader, you're not going to see it. You're going to see it like in the options market. You know, there are days we might make a little bit over. There are days where we might see something run 1,000% in one day. But I'll be honest, we'll see a move like that on 1 or 2 stocks. You know, we'll see it once a week, but it'll be 1 or 2 stocks. One of them, it might be a stock that we could have caught. One of them will be just something out of the blue that we just enjoy watching. 100% returns happens every single solitary day in everything that we trade every day in the options market. So 100% is a lot. Some of you guys have been waiting for 100% return in your stock for like 5 or 6 years. We see it every single day in hundreds of stocks daily. So, you got to condition your mind to see it. Once you start, when you see 100% returns, and that's what we're doing in the Millionaire Challenge group. What I'm helping these guys do is they're looking at numbers that you guys think are obscene. And now they're starting to realize that these numbers ain't obscene. Now, 1,000% is obscene. 100% is not obscene, guys. 20%. 20% in the options market is like 5 minutes worth of work. 20%. So, and I'm not just saying this because I'm trying to get people to sign up. Go look at some options. In fact, somebody give me a stock. I'll show y'all some stuff. We pull up stuff all the time. I can't really do it that much anymore because every time I pull up that option screen and I'll pull up that percentage, TikTok always flags me for showing something that's not. What do they say? It's not. What words do they use? They tell me that it's not original content, as if I created these stock charts, which is stupid. All right, but let's go back to NVIDIA. I'm getting off task. Let's go back to NVIDIA. Back to NVIDIA. I told you guys I'm going to show it to you in 4 different time frames. So we saw the investing time frame. I'm like, dang, I got 3 more charts. Let's say you miss NVIDIA and you want to swing trade it. If you want to swing trade it, you want to either use a 200-day moving average. Y'all see this? The longer the average, the longer you can be in that stock. So if you want to be in something for 3 months, then you need to use something like a 200-day moving average. So that when you hit something like the moving average like this, and we're looking at NVIDIA, these are easy freaking moves. It goes into that moving average where you guys go wrong. And I keep saying this over and over again, is that you guys keep buying it every single time because of FOMO. You'll buy it as soon as it touches the 200-day. You do it every time. And then you'll buy a 7-day or 14-day option because you can't afford to go 21 days or 30 days out. This happens to you. It goes up for 7 days, goes down for 10 days. And now you're like, the what would Joe do method sucks. Well, I'm sorry to tell you this or inform you, but that's not the what would Joe do method. The what would Joe do method, Joel's getting in way over here. You remember when I told y'all when I get into things, it goes up immediately? Why is it going? Do y'all know psychologically why it goes up when I get in? Because I'm going to go through the process of how you traders think. I'm going to go through why when I get in, it immediately goes up. And when you get in, you're struggling. Because you're watching TV, you're looking at information, you're seeing NVIDIA drop in price. As it starts to drop in price for 14 days, you're being conditioned by Wall Street that this stock is no good. Because that just makes sense. The first day it sells off, you're thinking, oh, it just sold off. The second day it sells off, you're like, dang, NVIDIA normally doesn't do this. When NVIDIA sells off for 7 days, you're like, oh, and everything else is up. Everybody counts NVIDIA out. Then NVIDIA's down for 14 days. You look up and it says NVIDIA's down, the longest streak in history. They're psychologically telling you not to buy it. All the while, us technical indicators, we sitting here laughing, looking at it dropping like a falling knife. Now, I own it. And I'm laughing because I know what's about to happen. Then, after about the 14th day, they don't wait the first 3 days to tell you that NVIDIA is falling. You're going to start seeing it. You're going to start seeing it in the Reddit rooms, on TV, and then all of a sudden, everybody's going to be talking about NVIDIA sucking. So what do terrible short sellers do? They decide they're going to short right here. Because they're not using moving averages. They don't even know what a moving average is. They're going to get in on the 14th day. I told you guys, short sellers are just as bad as people that are buying stocks because of FOMO. They just are. It's equal. You got equal terrible traders and investors on both sides. Short sellers get in late. Buyers get in late. No one, and I mean no one except the professionals, are getting in right here. Because it don't make any sense to get in right there. It's not at the highs. It's not at the lows. It's not even in the middle. But that's where the professionals are getting in. We're getting in the safe areas. And we're laughing. We're coming in through the back door. And the reason why we're getting in right here is because we know the first people that NVIDIA is going to attack is the people that are short. And we're hoping and praying that they start doubling, tripling down. They're going to double and triple down on this short. Margin calls are going to happen. All the while, we're looking at the 200-day, and the 200-day quietly is telling everyone, look, traders, we're about to make a move to the upside. We're not going to tell nobody, but look at what's happening with that 200-day. It's angled up. That means it's going to increase your luck. That means people are still buying it. So the people that are buying it now are going to be your whales that have been buying it, or people or whales that haven't been able to get in yet. And every whale wants to be in NVIDIA. Don't get it twisted. Everybody wants to be in the best, highest beta company on the planet. They just do. They're just periods where you have to be patient and buy it. You don't buy it when it's falling like a knife and it's cutting through the 200-day. And you're wondering, why isn't everybody not buying? Oh, they're buying it. They're just buying it in small stages. Remember, you got to think like a billionaire. If you're thinking like a billionaire fund, you're not going to put all your eggs in one basket. You're going to buy a little bit, buy a little bit more, buy a little bit more. And then when you see it getting away from you, you're going to try to throw the rest of your money in. So that's why this is the area that professionals are getting in. They're waiting. They're waiting for it to drop to an area where they know that the average is going to put you in a higher percent of going higher. But they're going to wait until it breaks that trend, because it's still a downtrend until it breaks the trend. The trend is your friend until it ends. A trend does not end, guys, until you get 3 candles on the opposite side of that trend line. I don't care if you're looking at a 5-minute chart. Well, you need 15 minutes of buying, 5 minute a chart, to declare that this might be a trend change. If you see an oversold condition go into buying, I keep telling you guys, that is one of the highest percentage trades you can take. The volume starts to increase while you're in it, gravy. You're about to make a killing. But when you're not putting any of the fundamentals in place, that's why you guys are losing money, because you're just buying off of a whim. There's no strategy. There's no structure. You can't even tell the story of why your stock is going up or why it should go up. If you can't tell the story is probably not there. Now, when you get in where I get in, and I've been teaching this for over a decade, when you pull up your volume candles, look at what the MACD is doing, increasing. The MACD at the bottom of the page, you know that thing that they tell you not to buy? It's increasing while you're in it. That's like the best thing on earth. You don't get out of this. It's increasing. Every day you look up and the bar is higher. Why am I get out of something where the bar is higher every day? Because y'all don't know how to look at this stuff. You just hoping and praying it goes up. Talk to your professionals. Then, like I said, you want a short squeeze to happen that's going to push it, and then it pushes it all the way to its highs. If you had just drawn a trend line right here, guys, or right here, well, right here would have been the trend line, you would have known when to get out. You could have got out here if you wanted to. That could have been your goal. Or if you stayed on board, it pushed one good time over that trend line again, then it formed. I keep showing you guys this. If you want to learn how to short, you better learn how to draw I created this pattern. Well, I didn't create the pattern. I call it the crab pattern. The crab pattern is the two big eyes. When you see two big eyes on your screen, that is when you short. That means Nvidia has crabs. It has crabs. Now, crabs isn't like crabs is not like a STD. It's bad. You definitely don't want to mess with nobody with crabs. But they take a little bit of medication. They shave away their little pubes. Shave away the pubes. Put on some cream. In about 14 days, they'll be straight. They'll be terrified. Might not want to do nothing. Scared that one crab stayed. But when the crab formation forms, that's when you short. I'm going to show you guys the crab formation on all your charts. You're going to be so surprised how many times you see this crab pattern. So now we understand patterns from the lows, RSI, oversold, trend line break to the upside. Now you guys understand the crab pattern from the highs. When you see this crab pattern form, run if it breaks that trend line. That trend line. Okay? Now, I'm going to erase all of that. Let's say you wanted to trade Nvidia intraday. Now, I'm telling you guys straight up, I have not seen Nvidia's chart today. I don't know what's happening in the chart. This is what we're going to look for. Now, we don't necessarily have to look for the crab pattern, even though I do look for the crab pattern on a short. What I'm looking for is I'm looking for a oversold position. That's the only time I'm going to counter trend. Whatever direction I see that VWAP going, initially that's when I'm going to trade it. Now, if I'm day trading, I'm not looking at that VWAP to be the end all be all. This is what it's going to do the whole day. I'm not going to do that. I want to see what the VWAP is going to be doing from 9:30 to 10:30, 10:30 to 12, 12 to 2, or 2 to 4. There's 4 different trading periods. 4, not 1. There's 4. If this angle down the first hour, I'm only going to take shorts, and then I'm going to sit back and see what it's doing at the 10:30 reversal. And then I'll try it in that direction. And if I'm losing then I'll wait and then see what's happening from 2 to 4. It's rare that all 4 VWAP sessions are going to fail you. Maybe if one fails you, it's rare that 2 of them is going to fail you. Definitely not going to be 3. It's going to be 1 or 2 at the most. That means the most losses you will get in a day trading like I trade is 2, period. That's the most. You're not going to lose more than twice. It just doesn't happen. Unless you're trading the wrong thing. Now, we're going to pull up Nvidia. Now, watch this. I'm going to pull up a 5-minute chart. I don't know what Nvidia did, but we all know the playbook before we even start. Now, watch this. 5-minute chart. You're gonna look at Nvidia at 9:30. Now remember, I don't get in until about 9:45. At 9:45, what direction was this line angled? This is 9:45 right here. Joel will not take a trade till 9:45. This is 9:45 right here. What direction? Please tell me what direction, because a lot of you guys don't know how to trade. And it sucks that a bunch of people on TikTok is teaching y'all some ridiculous strategies to trade. The most ridiculous things I've ever heard in my life. What direction? I'm going to take this FW Mobo off. I'm going to take the MACD off too. Now, I know you guys are like, Joel, that was just luck. Word? Have you been coming to my lives? Have you been coming to my lives? I perform a magic show every freaking day and blow you guys' minds because of how easy this crap is. I rarely lose. Guys, now I don't necessarily win all the time, but I rarely lose. Like I'll break even for a week straight. I'll break even trying to hit a home run. But losing? How? Because once you lose on one trade, all you got to do is take another trade, get your money back. Because if you're following the VWAP, you're probably, at the most, you're going to lose twice. The most. The most. And you got to be the most terrible trader to do that. It's angled down. What color are these candles, guys? Red. Anybody going long after 940 in NVIDIA, I'm sorry to tell you guys this, you don't know how to trade. You don't trade like the professionals. You trade your own strategy. You're in your own world thinking that the market revolves around you. And it takes a person like me to tell you that, to look you in your cornea and tell you, what the hell are you doing? You are not the market. You want to make money from the market. The market is the ocean. You got a small little cup. You got a mug. You got a cup. All you want to do every day is go to the ocean and get you a cup of water and take it home. But you guys be thinking y'all the ocean. Ego. Ego is the reason why most of y'all lose money. And it's education. Ego and education, the two E's. NVIDIA, this VWAP is angled down. You could have just taken shorts all day long at the VWAP and you would have made money. I know you're like, Joel, it's just today. Just today. Just today. Word? You think this reversal at the VWAP right here was a coincidence? You think that was a coincidence? That wasn't a coincidence. That wasn't a coincidence. You just didn't know about it. You just got to admit to yourself, you just didn't know. You thought you knew, but you didn't. Please put the VWAP on your charts, guys. It's going to help you. You don't even have to say where you learned it from. I know a lot of you men don't like saying that you learned something from another male. I ain't telling nobody I learned this from this young handsome black man on TikTok. What y'all gonna say? I stumbled upon this indicator. It's all good, guys. A lot of people out there like you learn a lot of stuff from me. Don't want to give me no prop. It's cool. Because karma to get you. You go out there and say you did it on your own. I told everybody I'm putting a root. From now on, I'm putting a root on everybody that come in here, learn something, and then go somewhere and be like, I'm self-made. I'm a self-made trader. I'm self-made. Your trading career ends that day. I put a root on you. You better give me my props or send some people to this room. All right, that was NVIDIA. Now, I didn't create the VWAP, guys. The VWAP is what professionals use. I didn't create the 200-day moving average or the 200-week moving average. What I did do was I created the What Would Joe Do method that teaches you how to put all of these basic fundamental tools together and know when to use it in whatever situation you're in. Again, my strategy, because this is Technical Tuesday, my system is the BTG system. Bias, trigger, and goal. Doesn't matter what chart you use. All right. Now, if you are intraday trading, in my opinion, you don't go higher than a 15-minute candle. Does that mean I can create a 12.5-minute candle? Yes, you can. You mean, Joel, I can use a 2-minute candle? You sure can. Just don't go higher than 15 minutes. What is the psychology behind that? Because you're not going to get in a trend, guys, if you're using anything higher than 15 minutes. The market is only really trending. Remember, there's 4 trading periods. I want you guys to understand the methods to my madness. Because once you understand it, you're like, damn, that makes a whole bunch of sense. Ain't nobody ever break it down like that, Joel. I keep telling you guys there's 4 trading periods. 9:30 to 10:30, 10:30 to 12, 10:30 to 12, 12 to 2, 2 to 4. What do those periods have in common? There's about an hour that the market trends. If you're using an hour chart and the market is trending for an hour, you're not going to get any information from that. What information you going to get from an hour candle? Now you can have a VWAP on your chart. You can. In fact, let me see. Let me see how the VWAP looks with an hour chart. I'm interested in seeing it. Hold on. I want to see how it looks. Hold on. Let me see. Let me change this 5-minute to an hour. It's going to have the VWAP on it. I'm going to see if you can trade this. If you could have traded today with an hour chart. I don't think you could have, but hey, let's see. This is how your hour chart is going to look. What direction is the VWAP angle? What direction, guys? This is 10 o'clock right here. I know you guys are like, oh my God. Even with an hour chart, I would have known what direction to go in. Yeah, because the VWAP don't change no matter what chart you pull up. You terrible traders. The VWAP does not change. Moving averages change. If you put a simple moving average on your chart, like a 200-day or 50-day or 20-day, it will change depending on what chart you pull up. The VWAP is the VWAP. It's the same value because it's a volume weighted average price for that time. And yes, Nvidia was angled down. What was it yesterday? If you wanted to trade Nvidia on Monday, what direction was this angled on Monday, guys? I bet a bunch of you guys were long. I bet you were long. You're trading Nvidia at 940. This bad boy was angled down. Now the RSI is going to change depending on the charts that you use. You shouldn't have been nothing but short all day on Nvidia on Monday. How about Friday, Joel? I'm looking at a 1-hour chart and will trade better than y'all. At least I got the direction right. What direction is this, guys? What direction is this on Friday? On Friday, you could have been long on Friday, short on Monday and Tuesday. And I didn't even have to study, but for 2 seconds. Y'all better learn what the professionals are using. Y'all better learn what the professionals are using. All right? Professionals are using the VWAP. All of them. One of them. Don't even watch a TikTok live host trade if they don't have the VWAP somewhere on their screen. If they don't know what it is, run. They probably don't know how to trade. And this is the thing. There are people that do have some type of intuition. Sometimes they will stumble upon something that helps them with the trend of the market. But I'll say this, sometimes it's not consistent. People that have great intuition when it comes to the market, that's not using like moving averages, they'll have great periods because let's just be honest, sometimes the market is just bullish for like 3 months. You wake up at 9:30 and the market just goes up and you see a pattern. You're like, every day, Joel, when I see this stock at 9:30, it jumped $4, $5 and then it drops. until that pattern goes away. These patterns never go away. All right. I'm teaching you guys patterns that never go away. And that's great because if you've ever played any sport like basketball, if you've ever swam, if you've ever golfed, you're going to come across people that get hot all the time. But if you play long enough, if you play golf long enough, you'll see somebody get hot for 30 days and then all of a sudden for 11 months they can't even hit the ball. Why is that? Because they got hot. They got into a rhythm until that rhythm was gone. But the people that have great fundamentals, they're going to be able to do well. They might not be the best, but they're going to be able to play the game. A lot of you guys are not able to play the game because you don't understand the fundamentals of the technicals. Like you don't even understand fundamental technicals. Fundamental technicals is moving averages. If you guys notice, if you guys watch really, really good traders, even the ones on TV, guys, nobody, and I mean nobody, is drawing support levels. Nobody's drawing support and resistance lines. That's why I always laugh when I see you guys. I mean, I got videos that teach you what it is. But when your whole strategy is based off of support and resistance line and you got these teachers charging you guys these thousands of dollars, I can tell that they're not real traders. No trader, no real trader uses a support because stocks don't go to support levels. Stocks that are look at this chart. Do you see this going to a support level? Do you see Nvidia going to a support level? It went at a 45-degree angle up because that's the optimal angle for something that's bullish and bearish. Stocks spend 80% of their times going at a 45-degree angle this way or this way. 10% of the time it goes sideways. How do I know these statistics? Because I'm a geek like that. And once you start understanding stuff like that, you're like, man, all this stuff I've been learning like that, I don't even want to use that. That don't even make no sense. There are support levels within that bullish move. Like if you're using, the only time I'm like, all right, guys, I think you should use support levels is if you're using Fibonacci levels. Like Fibonacci levels are different because they're just retracements. These aren't even support levels. They're retracement lines. So I can't even say this is, but if you're gonna use lines like this, see, a lot of you guys are drawing support levels down here. You see Nvidia go up like this, and then you're taught to buy it when it comes back to here. And it never comes back there. And then when it finally does, you lose because it don't ever come. And I say it, and I say it in that particular way, guys, because it's funny because it just doesn't. And I'm trying to get you guys, again, I'm not trying to get you to trade like me, but I am trying to get you guys to see the market like professionals. 45-degree angles, moving averages is your new support level. Support levels are not this anymore. Support levels are this and this. Support levels are angles, not horizontal lines, and definitely not vertical. Support lines are horizontal. They've never been this way because the market don't move this way. The only way you're going to hit a support line is a stock that's moving sideways. If you're a person that trades within a channel or a range, if you're a range trader, perfect. Draw your little support and resistance lines. I ain't really met too many people that make a whole bunch of money trading ranges. If you're one, school me, educate me. I ain't seen none. Momentum traders. And if you're gonna counter trend, in my opinion, when the relative strength index goes oversold, stay away from overbought conditions. In fact, if you see an overbought condition, buy it. You probably have a higher chance that it's probably going higher. You're not going to get a reversal at a overbought condition. For you guys that's using Bollinger Bands, you guys are learning this the hard way. Trying to short this market right now with Bollinger Bands. Bollinger Bands is the worst indicator ever created in history. If I see it If anybody even mentions it in this room, you getting kicked out. The worst indicator on the planet. All right. So that's NVIDIA. All right. So I'm going to look at you guys' stocks. It's 9 o'clock. All right. So I'm going to go ahead for the next 30 minutes. I'm going to look at your stock. Now, when I look at your stocks and I answer your questions, if you're not specific, then I'm just going to pull up a day chart. So if you want, like, everybody in here is not an intraday trader. And it's funny because some people just think that this is an intraday trading room. No, this room intraday trades. We swing trade, we invest, we buy options, we buy stocks, we buy futures, we buy crypto. So you got to be specific on what you want to look at. All right. I do want to give a shout out to Alfred, Tilly, Arwin, Prisma Glam Trades, Zano, Nick J, C Spooner, Jizu, Rich Mix, Desmax, Platinum Plus. All right, thank you for the support so far. If you guys can help me out with my hats, TikTok hats, I only got about 7. I need about 10 for a successful day. What's going on here? I can't even get to it. Hold on. So 3 of you ballers that's out there, if y'all can throw me 3 more hats, I appreciate it. Because I've been gone for about 4-5 days. I do want to give a shout out to Arwin, Alfred, C Spooner, Nick J, Zano, Prisma Glam Trades for supporting the room with those caps. You guys know my supporters. I'm gonna look at they stocks first. If you want to try to jump one of the supporters that are in the room, usually the top 10 that's over there, then throw me those letters that I created, like Wimsky did with with now it looks like this. So throw me some letters that look like that, and then you're more than likely gonna get your stock looked at. All right. Cool. So let's look at some of you guys' stocks. So let's start off with the SPY. Let's start off with the spiders. So the spiders, the S&P 500. Looking at it on a day chart, guys, we are high in the sky. For you guys that are trying to short it right now, stop doing it. But I will say this. If you are shorting it, it is giving you guys a crabby look. It is giving you a crab. Look, look, look. Watch this. If I put the eyeball here and I put an eyeball here, it is giving you crab vibes. The SPY is giving us crab vibes, guys. I saw the SPY kind of scratch its crotch. I don't know if they was just trying to adjust or what, but it's looking a little crabby. So if I was to draw a trend line there, guys, and you see that we broke that trend, if you want to short the SPY, this is how you do it. This is how an early short looks, guys. If you ever wanted to see, for you short sellers out there that are terrible, short sellers, this is how a short will look. You see how high, I'm going to show you guys why it happened. And every now and then, if this high, guys, was higher, you're going to see a high that was 776. Now, if we go to 777, it doesn't count. It does, but it usually doesn't count. If the market tries to rally and it doesn't get to 776, like right here, guys, we got to 775. That's the perfect crab type setup because it didn't get back to its all-time highs. That is the perfect setup, but you don't short there. You got to wait. Now, here's the thing, guys, because somebody done left and already put in an order for a short. You gotta wait 3 days for the confirmation. Now, I'm saying 3 days because we're looking at a day chart. If we were looking at a week chart, it would have been 3 weeks. If we were looking at a 5-minute chart, it would have been 15 minutes because 5 times 3 is 15 minutes. If you're using a 1-minute chart, it's got to be 3 minutes to break that trend. And yes, guys, there are trends within trends within trends within trends. It's like, wow, Joel. It's like in real life, the earth can be like a cell, and the cell is within the body of God. I'm like, yeah, it's deep. So, yeah, there's patterns within patterns within patterns. It just depends on which one you're looking at. If you're using a 1 minute chart, you're looking for 10 candle trends. That's the other number I look for, guys. 10 candle trends. We haven't talked about 10 candle trends in a minute. Do y'all know that the average trend is 10 candles? I know you guys are like, what? Yeah, the average trend is 10 candles. Now I know you're like, but how do I know which one to look for? That's interesting, right? Well, I've broken it down like this, right? So I like 1 hour. So I picked 1 hour. I love my optimal amount of time to be in a day trade is going to be 10 days. I mean, 10, I'm sorry, in a intraday trade is going to be for an hour. So that doesn't mean that I use an hour chart. If there's 10 candle trends within an hour, then I have to pick something that represents 10 candles, which is actually a 6 minute candle. Because think about this, 6 minutes times 10 candles is 60 minutes, which is my hour. But I got a small case of OCD. I don't know if I got it, but I got signs of obsessive compulsive behavior. That's why I can do this stock market stuff all day long. I can play golf, probably why I was great at swimming. You got to be a little bit off. So that 6 minutes is just weird to me. 6 minutes, I'm like, ugh. I'll do a 5 minute. It's the closest one. 10 minutes is too much. 5 minutes it's 1 minute less, but I'm good. I'll take a trend for 50 minutes. So if you want to know why I use the 5 minute, that's why. I like 1 hour trends. That means I'm going to be in something for 10 candles. Well, if I was using a day chart, check this out, guys. 10 candle trends. Watch this. I know you guys don't believe it. How many when this trend started, this is candle 1 right here. Now, it's not going to always be. Remember, I said average. I said average. I didn't say the exact number every time. That's candle 1 where I'm sorry. That's the last down candle, and the trend started on this candle right here. Well, then why did you even draw the other candle, Joel? Just to confuse everybody. Let me erase that. So you got this candle as the first candle. Well, watch this. If I was in this for a swing trade, if I was swing trading this, guys, and I was in it, I would be in it for 1 candle, 2 candles, 3, 4, 5, 6, 7, 8. This the 9th candle right here. This trend's probably over with. That's the 9th candle. Tomorrow will be the 10th candle. If I was trading this right around the 7th, 8th, 9th candle, I would be taking my profit, especially if I was going sideways. We break that trend, there's no way I would be in this swing trade. I'll be gone. Bye-bye. Peace out. But if I was intraday trading this, if I was intraday trading the SPYs, I know you guys don't believe it. You guys are like, whatever, Joel. 10 candle my ass. Watch this. Let's say you were able to get into this. Let's say you were able to get into this trade, right? Uh-oh. Let's see if you guys are still there. Uh-oh, I lost you guys. Hold on. I lost the crew. Give me a second. Oh, there you guys are. Whew, I thought I lost you. All right, look at this chart. This is the 5-minute candle if I was day trading, right? So if I was day trading, and let's say I decided that I was going to get in on this move to the downside. This started the trend right here. Joel would start counting. That's candle 1. Right about the 10th candle, guys, I'm going to be thinking, I don't know. I reassess the trade by the time we get to the 10th candle. The 10th candle is right here. 2, 3, 4, 5, 6, 7, 8, 9, 10. This is the 10th candle right here. Look at what we started doing. We started to go right back up. But check this out. We broke that trend. And then guess what we did, guys? This is the first candle. This is the first candle that broke the trend. Let's start counting because I know y'all don't believe it. You never heard nothing like this because you never really talked to real day traders. That's the first candle, second, third, fourth, fifth, sixth, seventh, eighth, nine, 10. Guys, it bottomed out at the 11th candle. I lie to you not. The market trends 10 candles, go up. Trend about 10 candles, goes up. It's going to stair step up. It's going to stair step down. It's going to stair step up. It's going to stair step down. I don't want you guys to only trade off. I just want you to be aware of the fundamental foundations of why things do what it does. So that when it's happening, you don't freak out. And you're like, dang, we about at the 10th candle. It depends on what you're looking at. You guys don't think it worked? Watch this. I'm going to pull up I don't even use a 10-minute candle. Watch this. I don't even use a 10-minute candle. I don't even know what it's going to do. This is a 10-minute candle. You don't think it works? Watch this. First of all, what do you guys notice on this chart? First of all, I notice bug eyes. Ooh, bug eyes. Look at that. Eye right there, eye right here. Chances are this market's probably about to go down. This joint got crabs. The market got crabs off of a 10-minute candle. 10-minute chart. This is the SPYs. This is Monday. This was Tuesday. But guys, look at this, guys. You could have drawn the trend line right here. This is the overall trend. It breaks that trend, probably falling. I don't even use a 10 can. I don't even use a 10-minute candle. But I will trade it better than you. I'll trade any candle. Like I told y'all be like, well, this one's better than this one's better than this one. No, it's not. They all the same. They're all the same trends happen within all the same time frames. Ain't none better than the other. Never has been. All right, let's say you took this short and you're going to look for about 10 candles. This candle 1. 2, 3, 4, 5, 6, 7, 8. This is about the 8th, 9th, 10th, 11th, 12th, 13th, 14th. All right, it went down for about 14. So it went down 1, 2, 3, 4. 4 candles went up, 5, 6, 7, 8. Then it went down for about 7 candles. So it's giving you about 7 candles. If you were to count all of these candles, man, this whole trend to the downside was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Shoot, that was about 20 candles. Remember, it's the average. By about the 10th candle, I would have probably said, let me stay in this bad boy. 1 candle, 2, 3, 4, 5, 6, 7, 8, 9, 10. This is the 10th candle right here. After about the 10th candle, guys, I'm like, yo, I might be able to get some more out of this bad boy. This still look bearish. I'm going to ride it out maybe for about 5 more candles. 1, 2, 3, 4, 5, 6, 7, 8, 9. This is after that 10 candles. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So that was 10 candles, still was going down. Then you got about 11 candles. So this whole move was about 21 candles, which is great, right? Then it started to go up. What do you guys notice at the bottom of the chart? What do you guys notice at the bottom of the chart? Let me know. Let me know in the comment section. What do you guys notice happening at the bottom of the chart after the 10 candles? Do you guys see it? Do you guys see what's happening at the bottom of the candles? Look at this. You're getting an oversold condition on the RSI. Joel will only counter trend if he sees an oversold condition. That's right. You could have rode this bad boy for about 10, 15 candles. Then you could have treated it like a video game and said, man, I'm about to make some money now to the upside. Shoot, I'm going to make some money to the upside now. Now, even if I had gotten into this trade by about the 10th candle, guys, I would have been like, it's not really moving. It broke the trend. Broke the trend. This is candle 1, 2, 3, 4, 5, 6, 7, 8, 9. By about the 10th candle, we right here. We're not really doing anything. And it's the end of the day. What am I talking about? It's 4 o'clock. It's the end of the day. It's not supposed to do anything. But you got a nice little move at the end of the day. I told y'all, it don't matter what y'all give me. Don't matter what time frame. I don't care. I will trade it. It's the same patterns. It's the same patterns. Pick a moving average. Pick your favorite. Well, if you're intraday trading, you're going to use the VWAP. We're picking it for you. If you're intraday trading, take away every freaking moving average you've been using. It doesn't work. Put the VWAP in place. That's your new moving average. For all intraday traders, you're no longer using your moving averages. Stop using them. Unless you're unless you're a super trader and you know what you're doing, keep it. If you're struggling, if you're only winning 50% of the time, even if you win in 60% of the time, put the VWAP on there. You're going to take your percentages up really, really high. You're going to be getting the direction right almost all the time. And the direction is the hardest part. And then set your strategy up to that direction. I don't care how y'all enter. Get the direction right. Y'all struggle with direction. All right. That was the spies. All right, let's look at Christopher wants to look at APP. You done with APP? What's that? AppLovin? Yeah. AppLovin. What do y'all notice here? What is this blue? What is the 200-day moving average doing, guys? Not how I feel, what I think is going to happen. What is this 200-day moving average doing? Y'all can see it with your own eyes. What is it doing? Please tell me. It's down. So guess what? I ain't interested in it unless I want to buy it as an investment. I'm going to change the way I'm thinking. If I'm trading this bad boy, when do you trade it? At the 200-day. That means I'm shorting it right there. Or if I'm using the what would Joel do method, I'm going to wait until it touches the trend and then Joel's going to get in. And I tell you guys all the time, when Joel gets in, it starts moving immediately. If this thing don't start moving in 2 or 3 days, I'm done with it. By the 4th day we get this big move, I'm laughing all the way to the bank. By the 10th candle, I'm like, all right, I've been in this bad boy for 10 days. 3, 4, 5, 6, 7, 8, 9, 10. This is the 10th candle right here. By the 10th day, I know this move is going to start petering out, but I'm going to keep my foot on the gas. Because look at there. Even if I had gotten in right there, even if I had sold right there, look at where it jumped up to. That same area that I got out. So I wouldn't have felt bad. Okay. Now, what I do like about AppLovin is that you are getting an oversold. You're getting an oversold RSI. That means, guys, this stock is probably going to reverse at some point soon. We don't know if it's 7 days or 14 days from now. I promise you guys the whales are looking at it. But no one wants to be the first person to jump in the water. They're waiting for a huge whale to jump in first that can move the market. Everybody's got it on their radar. Everyone knows, oh, guys, this is oversold. But I ain't about to buy it right here. You kidding me? No way, Jose. So how do you wait? All you do, guys, is you draw a trend line. We're gonna on purpose. I gotta put a note, or Christopher, you gotta come in here and remind me. We're gonna put a date. We started this trend line on, what's today's date? What's today's date, guys? August the 11th. We started this trend line on August the 11th. We're going to keep watching this because I'm going to show you guys how you guys buy. You guys don't buy like professionals. You guys buy just because you think it's too low or you drew a support line somewhere. Y'all see how I never draw a support line? Because all it's going to do is throw me off. I never draw a support line because don't nobody care about your support line. They don't. All right, I do see that we broke this area, but I'm not going to even draw it. If it becomes a support line, it is. It's still a trend line because look, it's angled. It's angled up. You see how that support line is angled up? I will draw that. We broke that line. That's not good. That means we can sell off a 7, 14, 3 days. I don't know. I ain't buying it until we break this trend and we're on the other side for 2 days. So I ain't even thinking about this. It's on my radar. The bias is still down. The RSI is telling us it can reverse. So even if I buy this, let's say I buy it tomorrow, we break the trend and for 3 days, we start rising up in price and we're at $360. Let's say we're at $360. I'm only going to take this trade, guys, to whatever this blue line is. We're at like, what, 512? The trade or the target is going to be that blue line at 512. Now, that's a pretty good move. I'll ride it from 360 to 512. In fact, if I was to buy it at 360 and ride it all the way to 512, I would make a 40% return. That's a nice little return. Who showed us that? Christopher? But I ain't buying it until then. I'm not buying it until we break that trend line. And yes, it's going to be higher. It's going to be in the 360 area. I know you guys are like, Joel, that doesn't make sense business-wise. Why would you buy something higher if you know it's going there? Because you don't know that it's going there. See, it's falling right now. Oh, it's going to get there someday, Joel. You're not thinking like a professional. You're not. It's going to get there, Joel. Every stock is 90% chance that it's going there. You're thinking like an investor trying to trade. See, there's trading and then there's investing. What you just said is an investing strategy, not a trading strategy. Traders trade off momentum, period. Period, point blank, they trade off momentum. They want to go in that direction. They're not dollar cost averaging and hoping that it turns around and then it goes back up. Or if you're a trader and you trade that way, you suck as a trader. You're trying to trade with an investing strategy. There's investing strategies. There's trading strategies. There's intraday trading strategies. They're totally separate. Just like there's real estate investors, they're homeowners, and then there's flippers. They're all involved in real estate. One is long term. One is more like a swing trade. More is like buying a property and renting it out. There's so many different ways you can approach real estate. Short term, medium term, long term, same way in the stock market. Short term, medium term, long term. 3 different strategies. Quit using your investing strategy to trade. Now, I am using the same setups, the same setups, the same setups, but my investing strategy is different. I would buy this as an investment just because it went oversold. So anybody thinking of holding this for 5 or 10 years, buy it now. But when you buy it now, you don't buy all your shares. You buy a quarter position. If it falls a little bit more, buy another quarter position. All right. If the volatility index goes above 40 or 50, then you buy your full position. And then you wait for it to go up in 5 or 10 years. And no, I'm not looking at the 200-day moving average. I'm looking, when I'm an investor, guys, I'm thinking, how can I make a 5x, 10x, 100x on my investment? That's what I'm thinking as an investment. I'm not thinking that way when I'm trading. All right. Cool. All right. Rich Mix. All right. You got your Wingstop. I was in Wingstop, no longer in Wingstop. Wingstop did me dirty. I took all of my money out of Wingstop and I put all of that money in Shake Shack. I sure did. What direction is this 200-day moving average angle, guys? You want to know why I got out of Wingstop? What direction is this 200-day moving average angled? Please tell me if in the comment section. You should have known what direction Wingstop was going. Why you think Joel is out of it? Joel is out of this stock because when I was in it, I tried to hold on, guys. The 200-day was playing. It was going down, then it started to go up. And then when it started to just go down, guys, I got out what? I got out like in April, May. And I saved myself a lot of money. And now all of those funds are in my Shake Shack. 200-day is angled down. That means you don't want to be around. The only way I would buy this is if it breaks this trend and it can stay on the other side of this trend line for 3 days. Now, I get it. It's oversold for you investors. If you're thinking about buying this, it is oversold, but it can go oversold and go lower. So just make sure that you're being careful when you buy this. The only time that I would buy this on a swing trade for like an options trade, like let's say I wanted a 100-day option. The only way I would do this on a 100-day option with it being oversold right now is, guess what? That 200-day better be angled up. This ain't angled up. This is angled down. No way you gonna get me to take a swing trade on this to the upside unless you break this trend. All right, this is Wingstop. Doesn't look good. Chart looks terrible. Now, the investing thesis is still in place. So I haven't totally given up on Wingstop yet. I haven't totally given up. The yellow brick road is still angled up, but it looks like it wants to go sideways. And when it goes sideways, that means I got probably another year that I can chill and not have to be invested in this company. In fact, it looks like it wants to do a double bottom down here at 66. That's another 50% down. So be careful if you're buying it. I know I was big on Wingstop. I had a lot of jokes about it when I was buying it back in the day. But I ain't joking no more because if you're in it and you're losing money, that ain't nothing to laugh at. You know what I'm saying? I got a lot of jokes, but I don't want you guys to lose money. And I'm completely out of it. If you've been following my lives, you would know to not be in that particular stock. Is that in? Oh, you want to look at ServiceNow. All right, so ServiceNow, the 200-week moving average is angled up. So if you're investing in this was the best time Now remember, just because it hits the yellow brick road doesn't mean that you buy. I keep telling you guys this. The market will overshoot. It will overshoot to the downside, and it will try to overcorrect to the upside. So the way that you make yourself disciplined in buying, in my opinion, is to throw a trend line on that mug, because you don't want to catch a falling knife. Once it hit that yellow brick road and started to go down, all you had to do was just sit back and wait for it for 3 candles. Now, for 3 candles, it ran. Now, I ain't gonna lie, because we look for 3 candles. I get it. You're like, Joel, I got 3 candles. Yeah, but them 3 candles moved this stock from $90 to 140. That was a lot of candles. That was a 50% return. All right, so sometimes you might want to be in a little early on that 1 candle. That was 1 week of buying. So what I usually do when I want to buy something, guys, and I really don't want to be late, let's say I see something like this on this chart. I will flip to the day chart and look for 3 candles. So what I would have done for this, if you guys wanted to know if when I would have gotten in, I would have switched this over to a day chart. You see how my trend line is still in place? Now watch. Now when 3 candles form, now you can say, all right, that's when I'm going to get in right here. I'm not going to wait 3 weeks, but I will wait 3 days. Joel would have been in right there, and look at what happened after that. I told y'all, when I get in, that bad boy start going up immediately. And it ran all the way to the 200 day. You could have said, all right, this is going to be my target. Or if it breaks that trend line. So when it broke the trend line, when it broke this trend line right here, then you could have been out right around here. Could have been out somewhere around there. And you would have saved yourself some money. And now what's happening? Now we also started to go down in price. The 200 day is angled down. So if you wanted to buy this, I see the setup here, but I wouldn't have been comfortable with this, because you know me, I do not like 200 days that are angled down. I just don't. Like, why do I need to buy service now when I can buy Microsoft? Like, I can make the same amount of money or more. I know the 200 day is angled down on this too, but I'm going to go with the better software company. If I had a choice between the two. But if you're doing ServiceNow, and I'm not trying to beat up anybody, then I'm going to trade it to that blue line. Once we got to the blue line, that's it. I'm out of that trade. If it keeps going higher, you don't have to get out. I would trim it, or I would trim it, or I would say, all right, soon as it breaks this trend, my bet, I'm out. And it's holding the trend. It's holding this trend. It's holding this trend. Once it breaks that trend, I'll be out that bad boy. All right. Just blocking some accounts. Hold on. Yeah, you could have bought. Jennifer wanted to know if you could buy puts. Yeah, if you're gonna buy puts on Wingstop, you do the opposite. So if I wanted to buy puts on Wingstop, you're gonna hit the 200 day. Or let's see what's happening in the chart. If you wanted to buy a put, you don't buy it now. Like, this is the worst time. This is the worst. Now you can still go down for 20 more days. Like, remember, you sometimes you get lucky, guys, but I'm gonna be honest with you. If you wanted to short Wingstop, you're late. You should have been shorting Wingstop if you were using the what would Joel do method. If you're using the what would Joel do method of trading, all right. If you're using the what would Joe do method of trading, the best trades are going to be when you hit some type of moving average. So you don't necessarily have to wait for the 200-day moving average, guys. You could have waited till it got to maybe the 50 or the 100. So check out this one. So you see how we got to the 100-day moving average? That was the trade. All right. If you were using the what would Joe do method of trading, and you wanted the short Wingstop, the what would Joe do method of trading is saying that the highest risk trade that's going to give you, I'm not the highest risk, the highest the trade that's going to give you the highest chance of winning. The highest chance of winning is going to be whatever asset you have that's touching the moving average that you're using, and you're going in the direction of that moving average. That is the what would Joe do method of investing and trading. The 100-day moving average was angled down. A lot of traders love using the 50 and the 100-day for their entries. They're not really using the 200-day. So when it hit the 100-day moving average, you're going to do it, right? It hit the 100-day moving average. Just because it hit it, guys, I do not want you guys, thank you, whoever sent that heart. Who sent me that? Thank you, Jennifer. If it hits this 100-day moving average, and you see that it's angled down, I do not want you guys taking a short or a long just because it hits the average, because it can keep going higher. More than likely, it will overshoot just to make you panic. The higher risk trade, I know it's at a lower price, but I want you to start counting. It's going to be the second, third, or fourth candle after a trend is broken. This is the better entry. All day, every day, this is the better entry. What did I tell you guys? When Joel gets in a trade, it immediately goes in his direction. So if I was shorting this, guys, the next day you would have been winning. That's how you know you picked a good trade. I'm telling you guys, no matter how you trade, when you see that trend break, it's not the first candle or the second. It's usually right around that third candle you really start seeing the momentum kick in. But you got about 10 candles. 10. So once you're in for about 10 candles, let's count them. You got one candle here. When you're in for about 10 candles, that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Look at what happened when you got to the 10th candle. Once you got about 10 days of trending, guys, it went sideways. Joel would have been out after that. After the 10th candle, I might have stayed the 11th and 12th day. If I don't see no movement, I'm taking my money. Because the market is searching now. The market's like, all right, anybody else want to short? Anybody want to go long? They're taking bids. I ain't for that. And then it continued to go down again. Now you can treat this as a new trend. Anytime you go down 10 and sideways, you can treat this new move as another 10 candle trend. But look at what number we're at. We're already at 1, 2, 3, 4, 5, 6, 7. Guys, this is the 9th day of Wingstop going down. No way I'm going to take a trade 9 days into a trend. You might luck up and it might go down for 20 days. It's just not a good risk to reward from a professional standpoint. From a professional standpoint, it's just not a good risk to reward. Can it make you a gazillion dollars? Of course it can. Can it make you the highest return you've ever made in Wingstop? Of course. You might luck up and then tomorrow there might be a chicken scare. And you're in the short already, and then you wake up and you're up 2,000%. But I always tell people, lucky people, a lot of the times, if you ever meet lucky people, guys, they're not really lucky. They just create the luck. They work so hard Like a lot of people call me lucky all the time. Joe, you're just so lucky at the trades you pick. I'm like, do you know how many hours I put into the market? Even the hours that I put in with you guys, that's I'm still studying. When I come on and do these lives, I'm studying for 2 hours every day, and that's outside of my of me watching the market, in real time. So even though I'm helping you guys out, I'm studying. I create my luck. So when I get into things and it starts to move my way, it's because of the hours that I put into the market. I can see these patterns like nothing. That is the reason why I was able to create the What Would Joe Do method of trading and investing. All right. So I want you guys to understand those patterns because you're going to see the same patterns no matter what chart you're looking at. All right. No matter what chart you're looking at. All right. Here's a new one. We haven't looked at Chewy in a minute. So if you guys don't know what Chewy is a stock that involves, I believe it's like insurance companies for pets. So if you have a pet, and you buy this stock makes money off of the insurance premiums for pets. Now, I don't know what's happening. I know during COVID, this stock went through the roof because you know what was happening during COVID? During COVID, guys, it wasn't because pets were dying. It was because people were buying pets at an alarming rate. Maybe they weren't even buying them. Maybe they were getting pets as gifts. But when you're sitting at home and you're thinking about your loved ones, and let's say you're single, a lot of single people were picking up pets because it was very lonely. If you didn't have a family, to go to, or a loved one or a spouse, you could feel pretty lonely, right? So a lot of people were buying pets at that time. And with people buying pets, now that you can buy insurance policies on your pets, companies like Chewy that sells, I think, insurance policies and pet products, their stock did really, really well until everybody went back to work. And when everybody went back to work, Chewy got ticks. Chewy got ticks. Look at this. Now, this is an uglier crab, but there's your crab right there. See that crab pattern, guys? That right eye is always a little bit lower than that left eye. The right eye is always lower than the left eye. I want you guys to remember that. In a crab pattern, the right eye of the crab is cockeyed. We got a cockeyed crab. When that cockeyed crab comes along, guys, all you got to learn how to do is draw this line right here. When you draw this line right there, you have a very high chance that this stock is about to sell off hard. Because it's got crabs, it's got ticks, it's got something. Look for that pattern. Two big circles. If this right eye is lower than this left eye, and you draw this trend line and it breaks it, uh-oh, SpaghettiOs got crabs. Joel would have been short somewhere around here. It tried to come back and test it right here and then fell back over even harder. Now, what's happening in the charts right now? The two guys, it's no way on earth you're gonna get me to buy anything with a 200-week moving average angle down. I'm sorry. If a stock's average price for 4 years has been going down, it's not on sale, guys. It's something broken. This means there's something broken within the company. Doesn't mean the company can't be good. Nike's a great company. You have great companies all the time, guys, that Wall Street just does not want at this time. There are periods of time, guys, where these companies just don't make money. Wall Street's not involved in. It's just like real estate. There's certain periods, guys, where you drive around and a neighborhood can be hot And then next year, that neighborhood can be cold. And then that neighborhood can warm up because other, more land is available. I don't know. Maybe they just built a new mall and then it becomes hot again. It doesn't mean that the neighborhood is bad. It just is it's not hot. Guys, this stock is not hot right now. It's going down. The yellow brick road tells the whole story. You don't have to listen into no earnings call. You don't have to do research on it for 3 years. Wall Street has spoken. The yellow brick road is angled down. Do not be around in these companies. You don't want to stay around. Can you trade these? Of course you can. Now, if you're going to buy something like this with a yellow brick road angled down like this, the only way on earth you're going to get me to buy it is if it goes oversold, period. Because the only way I'm going to buy the most terrible house in an area where nobody's buying is I got to get the deal of all deals. Because I know I'm going to have to sit on it for a minute. I know ain't nobody buying in that area because there's a landfill and they're about to bring data centers. But I mean, it's a 3-story, 3,000 square foot house for 10 grand. I just had to buy it. Sometimes you just buy something because it's so cheap, you just got to own it. Like, I'm sorry. I'll just Airbnb it. I'll get that $10,000 back. That's what's happening with this company. It's like a landfill came and like there's something broken. Joel is not going to stay around. Look, even when it went, this is how you even know too. Even when it went oversold, ain't nobody buy it. Nobody cared about this oversold condition. Nobody. It went, oh, guys, when you get an oversold on a 200 week, think about this psychologically. On a 200 week moving average, which is the Mac Daddy of all the moving averages. It's the longest time frame. You hardly ever see an oversold condition. If oversold conditions came in and nobody bought it still, oh, it's something wrong. It's something wrong. No way you're going to get me to buy it. Sorry, bye-bye. I don't care I don't care who works there. No way you're going to get me to buy this. And even if it turns around, so what? I'll wait until the stock is $60. It's what, $22 a share? I'm going to wait until it's 60. I need for people to have been buying this stock for 2 years straight for me to buy it. Because there's so many, because guys, I want you to understand this. There's so many other companies on this planet that you can buy. Why are you guys waiting for a broken company to turn around? It's just like this. It's the same conversation you have with your friends with these relationships. There's a billion people on this planet. Why are you waiting for this individual to get their act together? When you could be out here living your life with this stock and that stock and this stock. Because they love pets. Or they go find somebody else that love pets. You know how many pets? That's the requirement? To love pets? All right. If you were looking at this as a trade, if you were looking at Chewy as a trade, you could take it as a trade. Look, I beat up on people, but you got to understand who I'm beating up on. When I start beating up on a stock, guys, the first thing you should be asking yourself is he looking at this as an investment? Is he looking at this as a trade? Or is he looking at this as an intraday trade? Because a lot of you guys will change your position on it, even though I'm talking to my investors. Trading, guys, if you're trading this, would I be getting in now? No. If I was to buy this to the upside, I'm going to draw a trend line. You could have drawn a trend line right there, or you could have drawn a trend line right here. If somebody said, Joel, you have to trade Chewy and you have to make money on it in the next 3 months, I would have been like, cool. I would have waited for it to go down in price. I would have seen it go oversold on the RSI. And if they said I had to go long, I see it go oversold on the RSI. It breaks the trend. Joel would have got in somewhere around here. Just like I told y'all before, when Joel gets in something, it immediately starts going up because that's where the professionals are getting in at. And then you could be in it right now. Now, would I short it? If I was to short this stock, if I was shorting, if I was looking for a short position, y'all know me. I'm trying to wait for it to at least touch this blue 200-day moving average. We're looking at Chewy for those that don't know. We're looking at Chewy. Chewy. Now, the only way I'm going to short this is I got to draw a trend line. It is breaking this trend line. If you want to get in a little early, like right, if you got in today, I wouldn't be mad at you. If you got into this short today, that's how you get in. I know it looks funny. It looks like it's a long way away, doesn't it? That is actually the professional way of getting into this stock on a short. Now, some people have their different ways of entering, right? They might throw a Fibonacci retracement on it. They might say, look, they might be looking at the volume. There's a whole bunch of different ways. I'm just showing you if you want to know what the bias is of this chart, is the chart's bias is already down. So I'm looking for shorts. So if I see me break this trend line, I'm taking this trade all day, every day, and twice on Tuesday. I'm taking this every time. If it breaks back above this candle right here, you get out. Here's my stop right there. I'm going to risk this amount of money. Watch, I'm going to risk this amount of money. If I got in here, I'm going to risk this amount of money to make this amount of money. My reward is way bigger than my risk. I'm going to do that all day long because I can lose 4, 5, 6 times in a row. I just need one of these trades to work out. It'll take care of 3 or 4 losses. I'll take that trade all day, every day. Shoot, I might take it tomorrow. Except y'all know I don't really be swing trading 7 to 10 days. I just don't do it. All right, what time is it? 9:52. Let's look at Shanice wants to look at, what's that? AXTI? AXTI? All right, wow, that's an amazing move. What do you guys notice? That technically was perfect. Y'all see how perfect that move was? This is what I call a perfect. Well, it's not perfect unless the RSI goes off, but it's dang near perfect. You want a stock to move into a moving average, preferably the 200. If you see this bad boy stay above this line for 2 or 3 days, what did I tell you guys? When Joel gets in a trade, God dang it, Joel, it immediately goes up. I'm like, yeah. The next day, it went up for 3 days. Now, it's been 1, 2, 3, 4, 5, 6, 7. It's been 8 candles, guys. It's been 8 days. We're getting near that 10 candle trend period. Uh-oh. So be careful. So if you want to see how it looks like this. That's a great move to the upside. The 200-day is angled up. I know you guys think that the trend was down. It wasn't. It was a short trend. When you look at the overall trend, look at this. Look at this chart. The 200-day is angled up. The overall trend has always been to the upside. I only want to take trades to the upside. Now, if you're a super trader, if you're a super trader and you came in here and you said, all right, I'm going to do what Joel says. I'm going to draw. He keeps talking about these bug eyes. Now, this bug eye, this one's cockeyed. I really don't like the cockeyes to be like this. I like it to be this way. I like it to be cockeyed like that. But see, even that looks kind of bad. Well, we'll say, so, this was this stock getting crabs. Y'all see the crab? I hope y'all can see the crab. You see the crab? The best trades are going to be, hold up. The best shorts are going to be when that right eye is lower than the left. We call that a high, we call that a lower high. This one actually hit a high and then reverse, right? But if you threw a trend line on it, you could have taken a shot at a short. I know you guys wanted to short it right here and right here. That's not the best risk to reward area. I'm telling you guys, that's not where the professionals are shorting. The professionals are not shorting at the highs because companies or stocks that hit highs, they normally keep hitting highs. They keep hitting highs, just like if you're the type of person that goes and look at the 52-week low list to buy your investments. That's one of the worst strategies ever created or ever heard of. That's how I immediately know if I'm dealing with a novice trader. Everybody on Wall Street knows to stay away from anything on the 52-week low list. But when you're a human and you never traded or invested before, it sounds like the most brilliant thing on earth. You're like, Joe, don't you buy low and sell high? I'm like, yeah. So why wouldn't you go to the 52-week low list to find out what to buy? Because companies that are on the 52-week low list is pretty much the shiznit list. Those are stocks that nobody wants. And that's not how Wall Street works. Wall Street is not the type of environment, guys, where we run to what everybody else doesn't want. That's not how you make money in Wall Street. Maybe other investments, other areas of investing, you can do that. You don't do that on Wall Street. You want to buy what these money managers and mutual fund managers are buying, because they're going to help you manipulate that price to the upside. You want to find things where they're buying it month after month after month. And if they made a whole bunch of money on it for that first year, you guys think that they changed the playbook year to year. They don't. I keep telling you guys, they run the same exact plays until you stop it. They're going to keep running the same play until it stops. Sometimes it's years. Sometimes it's decades. They're going to run the same play until it loses. All right. So on this particular chart, you got the bug eyes. It broke the trend. The best risk to reward area to start shorting, I know you never learned this in your $30,000 class, is going to be when it breaks that trend for three. You want to look for about 3 candles. That's where Joel would have started shorting. Joel would have immediately, it would have taken 1, 2, 3. Yeah. On that third day, I would have been shorting. It immediately started going in my direction for 1, 2, 3, 4, about 5 days. Then it came back up. What did I tell you guys? The professionals are always taken care of. We're taken care of, guys. If it goes against us, stock market always takes care of the professionals. If you're on the wrong side of the trade, if you get in where the professionals are getting in, even when you're wrong, they're like, we got you. We're going to get it right back to that price before we keep going lower. It came right back up to here. Probably because some professionals were buying it at this trend line. So the market protected where people were going short and long. You see, at that area, you could have gone long thinking it was going to go up, or you could have gone short where I would have gotten in. For those that were long, It went down in price, came back up. It says, we got you. Anybody that's short, we're going back down lower. Where are we going? Everybody knew where we were going. To the 200-day moving average. Everybody knew it was a straight line to this blue area. Everybody knew this. Because we're not drawing our own support levels anymore. Not in this group. Don't nobody care about your trend line. Don't nobody give a damn about your trend line. Stop drawing them. They don't work. Nobody cares about it. It's not going to stop like a rock at your trend line. But it will drop to a moving average because everybody's looking at this. Good traders, bad traders, horrible traders, great traders, super traders, investors, mutual funds, pension funds. Everybody's looking at this 200-day. You can't go wrong with the 200-day. You can go wrong with your subjective trend lines. Stop drawing them. You will never see me drawing trend lines during these lives. They don't work. Or resistance lines. They don't work. Stop using them. Start looking at the market like professionals look at the market. We hit the 200-day moving average. You draw your trend line. Get out if you're short. If you're long, bam, you get in long. You could have rolled this down. It took its crab medicine. Everybody said, all right, it's time to buy the stock again. Now it's off to the races. I don't even know what this stock is. And I know you guys are like, hold up, Joe. How come every single solitary stock we looked at today are exhibiting the same trends? Because I keep telling you guys, once a company is worth more than $1 billion, and you got these billion-dollar pension funds, these trillion-dollar pension funds placing and putting money in there. The fundamentals are the fundamentals. Every company is going to have its different fundamental reason to go up or down. But let me tell you something. They're going to all technically move similarly. How are you going to buy this fundamentally good or bad company? How are you going to short this fundamentally good or bad company? That's the difference. The technicals are going to tell you how you handle this good or bad company. Fundamentals are going to be specific to that company. If there's a reason to buy it, even when a fundamentally good company is going up in price, there's a way to buy it technically. Okay? Because your professionals are going to say, all right, even if I want to buy art, even if I want to buy real estate, there's a thank you, Mrs. Treetop. There is a fundamentally good way to buy these particular stocks. All right. So hopefully you guys learned something today. Y'all need to show Mrs. Treetop some love. She's also a financial wizard. Can teach you a thing or two. Drop into her live. She usually goes lives late at night when I'm asleep. I've been going to sleep early recently. All right. So, hold up. I know we didn't get to too many stocks today. Let me try to see if I can get a couple more in. Let's look at, let me see if I can get a couple more in. We got Corning. I own Corning. I'm going to breeze through these. You got Corning. Let's look at the chart of Corning. I'm in Corning, guys, and I'm loving it. I'm loving it. What did Corning just do? God dang it, Joel. I can't believe that all of these patterns are happening at the same time, at the same areas. Remember when the market was selling off and I was feeling all bad, but I kept telling y'all, why are all of these things? Remember what I kept saying? Why are all these stocks at the 100-day and 200-day moving average? I said, why are all of them at the 100 and 200-day move? If they weren't at the 200-day, they was at the 100-day. I said, that's weird. And they broke their trends, and it looks like Corning is on its way. This is a great company to own if you're interested in data centers. Yes, I'm heavily invested in this one. It did sell off really hard. Y'all see how much it sold off? I got you guys in this company with a Fibonacci retracement right around the 50% area. So anything 157 or lower was a pretty decent buy in this particular company. All right, so hopefully you guys capitalize on it. Corning makes the glasses for pretty much anything technology based. Phones, iPads, and they also put a little thin film around the wires that are going to be underground in a lot of these data centers. So they are going to do a lot of the fiber optics for the data centers. All right, so if you want to own Corning, go ahead and do it. Mike wants to look at CoreWeave. CoreWeave was up big after hours. Remember how I was crying about this stock? Guys, y'all remember just last week I was in tears. I was literally in tears on one of these lives because I could not understand how wrong I was in this company. Do y'all know I'm up like 30% now? I went from, now mind you, I owned this stock all the way when it was $187. I was in this stock when it was worth $187. I was up something stupid. It was over 100% return. Then it dropped all the way down to 90. I think that's where my entry was. And then I was down. So if I was up about 180%, 100%, I probably bought it, I don't know, maybe in the 90 range. I'm just guessing. I got to go look at my receipts. And then this bad boy went from 90 guys to 60. It went from 90 to 60. That's like $90,000 going to $60,000. It was down 35% in about 3 weeks. And I could not I did not understand. I was like, why is this happening? Like, this makes no sense. This company is smack dab in the middle. CoreWeave, guys, is smack dab in the middle of data centers. What they do is think of CoreWeave as a general contractor for real estate. They're not the ones that are going to put up the drywall. They're not going to do the floors, but they know all the people that want to do it. So you go to CoreWeave and you say, CoreWeave, I need you to create you need to put together like this data center thing for me, and then you need to help me like rent it out. It's like the general contractor for a rental property. Like, they're smack dab in the middle of it. So I understand why it went down when they said that the numbers were gonna go away, but you now got Nvidia with that $500 billion group where they're financing, and they're going to make this thing happen whether they want it to or not. And that $500 billion is going to flow into companies like CoreWeave. So now the stock is popping. It went from $60 back to $90. It went from $60 back to 90. Y'all know in 1 week's time, guys, in what is this, 7 and 8 days, this stock is up 50%. I was literally in tears on this live. I didn't want to tell no jokes, wasn't nothing funny. I didn't want to go live because I had a full position in CoreWeave. A full, that means the maximum amount of money that I would put into a company, I was maxed out. And that bad boy was down quickly, so fast I couldn't even sell. And then we found out that CoreWeave was one of the #1 positions for old boy that had that firm that had to liquidate their accounts. I forgot the name of the company. Somebody put it in the comment section for those that don't know about it. There was a I don't know. It's called something awareness. Something awareness. Something self-awareness. Awareness. Something situational. Situational awareness. Situational awareness. CoreWeave was their number one holding. They got a margin call. They had to liquidate all of their position. Now, mind you, this is I think they had $50 billion in the market. CoreWeave was one of their top No, CoreWeave was their number one position. Number one. That company alone brought, now CoreWeave was going to drop anyway, but then when you get liquidations like this in the same company, remember how I told you guys I used to think that stocks 1 to 1, like if it was this amount of money, it was that amount of money that was in it? Nah. A whale can manipulate the market cap of a company and not have to have all of those funds. They do it all the time in the options market. When you get a large liquidation of a company and this is the number one company selling that stock that day, and remember guys, when a broker makes a margin call, they don't care how much money you lose. That means they're taking whatever price is out there for those shares, and it can make the stock drop until they fill all of those shares. They don't care that you're about to go bankrupt and your company's going to go under. They act like the mob. They want their money right now. They hit sell, market, whatever the price is. And if there's not enough shares out there, it's going to keep dropping until it fills all of those shares. That's what happened. So then when the market figured it out and they was like, hold up, we knew that CoreWeave was pretty much one of the most popular stuff. Like if you're into AI data centers and you don't own CoreWeave, then you don't understand data centers. They're like smack dab in the middle of it. One of the top companies that's involved in it, right? I wouldn't say they have a monopoly, but you know, they're doing well. Whatever the case, stocks sold off, pulled everybody's stocks down, and everybody realized, oh, hold up, this is like, I don't want to say the Nvidia of AI, but it's a top holding for a lot of these. Even Nvidia was buying a lot of CoreWeave. That's how CoreWeave got on my radar. It got on my radar because I went into my chat GPT and I said, what are the top 5 stocks that Nvidia is investing in right now? What are the top 5 companies on Wall Street that Nvidia is investing in right now? CoreWeave was number 1. Number 2 was like Arista Networks. Number 3 was like Corning. So I bought everything Nvidia was owning, right? So the whales that were out there knew that this was a problem, and they knew that CoreWeave shouldn't have sold off the way it is. And now CoreWeave just had its earnings, and CoreWeave knocked it out the park. I think it's up 13 to 14% in after hours. So tomorrow, CoreWeave is probably going to be up in the 15 to 20% range, in my opinion. I don't think it's going to stay there. But when you have a stock like this and you got a very, very high short, like the float for it is very, very high. I think 20% of it, 20% of the stock is being short. You're going to see a bunch of short sellers cover tomorrow. And there's a bunch of people in here right now that short CoreWeave. I hope you bought it in options so that all you lose is those options. Because if you bought it in stock shorting, you're going to be in for, you might get a margin call yourself. So be careful. All right. Yep, that's the young kid with situational awareness. All right, hold on. I'm going to give y'all 15 more minutes. All right, we got Cisco. Y'all remember that property I had? Y'all remember that property I had listed for? That's why I gotta leave. Y'all remember that property I had listed for? What was it? 550 grand. It just sold today. So I gotta go get my seller to sign off on the contract. So that will help with this Africa trip. $500,000 house. With my commission, whoo-hoo. All right, looks like Cisco's trying. If Cisco breaks this trend line, guys, it will have crabs. If it breaks this trend line, Cisco will have crabs. So be careful. It has to hold this trend line. It has to hold this trend line. Day chart is angled up though, so it's doing well. You just don't want it to break this trend line. If it breaks this trend line, it doesn't mean it's the end of the world. It's probably going to drop down to this 200 day, which is here. And there's a gap to fill right here. So it never filled its gap. 80% of gaps fill. It hasn't filled the gap at the $100 strike. So I wouldn't be surprised if Cisco goes back to $100. Africa is in December. Trip is almost paid for. RCL. And the Africa trip costs more than my Maldives trip. Shoot. Listen, Maldives was expensive. But hey, if you've never been to Maldives, you need to go. Like that was one of the most breathtaking places I had ever been in my life. Pure, like y'all know that all the islands in Maldives, y'all know in the Maldives, they only allow one hotel to run the whole, I don't want to say, is it country? The islands. There's only one hotel allowed at the islands in the Maldives. So there's no Marriott and, you know, dang, why can't I think of hotel names? But there Hilton's, there's no Marriott and Hilton and whatever. There's one hotel. Y'all know there's no above cables. Everything is underground in the Maldives. There's no wires anywhere. It's just pure air. Great place to go to. They had translucent crabs. Guys, the crabs in Maldives, you can see right through them. They look like water. They were crabs. They literally looked like water walking around. It was crazy. In the Maldives, guys, they had the little sharks. The little baby sharks swam, and you could see them in the water while you're walking down the beach. One of the craziest things I've ever seen. In the Maldives, they will allow you to rent one of the little islands. We rented one of the islands one day. It's like a little island, and we were the only people on it, and you can have your own like date, like five. They just leave you on this island by yourself. It's your island, and they leave you there with food, and then they come back like 3-4 hours later. Craziest thing I've ever experienced. All right, you got RCL Royal Caribbean. Looks okay. I ain't buying it. 200 days angled down, but if you're in it, great. There's other companies I can own. If it goes oversold, I might think about buying Royal Caribbean, but Royal Caribbean is already, look, I mean, it's doing well. It's going to have some issues when it gets up to this trend line. KNSL, what the heck is, what is the heck is KNSL? I've never seen that stock before. Kinsale? Never heard of it. You got me on this one, but the 200 day is angled up if you're interested in Kinsale. If you're interested in Kinsale. $200 day looks pretty. 200 day was angled down. It is getting above it. So it did have some short term downtrend. If I was trading this, your boy would have been short. I would have been short. Look at that. I would have been short until we touch this 200 day. Even then, I'm thinking this. If this stock breaks to the downside, guys, because it's got a downward sloping 200 day, if it breaks this trend line, it's bye-bye for that stock. Just letting you guys know. Just letting you know. What is this? Genuine Pony? Pony. 200 days angle down. No oversold. If it breaks this trend, if it breaks that trend line, you could take a shot at it, right? You want 3 days, it either has to be sideways or up. Sideways or up. Joel would have been in somewhere there. Now, this would have been one of the few times I would have been down for money. Because remember, if you get in, what did I tell you guys? If you get in at a good risk to reward area, even when you lose, the market will say, look, I'm going to give you one chance to get your money back. What you going to do with it? If it had gapped down like this, guys, Joel would have been out right here at this green area. Even though it kept going higher, that move would have scared me. I would have got out and I would have said, all right, next time it has to go in my direction immediately. If I luck up and it gets back to the price that I bought it at, I'm getting out immediately. I'll try it again later. Especially if I'm going against a trend line. Like if I take that shot and the 200 days angle down, no way I would still be in this. You got to have balls of steel or ovaries of steel to have stayed in that with that 200-day angle down. Not me. Joel would have been out. All right, SK Hynix. Woo, you up 400%. Good job, Platinum Plus. Up 400% in that RCL. Are you short or are you long? Well, I don't remember what it was. Were you short or long? Remember, bulls make money, bears make money on every chart. I just want to help you guys with better entries. You know? Better entries. Now, SK Hynix. If you bought this as an investment, guys, what do we say about companies that, well, it didn't really IPO, but it did. So let's talk about this. Anytime you get a new stock on Wall Street that everybody can invest in, more than likely it's an IPO, which is an initial public offering, which is a company that's going from private to public. This one was treated a little bit differently, but it's still the same outcome. SK Hynix is the #1 memory. So if you've been buying Micron, if you've been buying SanDisk, this company is the #1 company for memory. And it's called SK Hynix. It's a Korean company. America allowed it to be bought on our New York Stock Exchange so that we can take part in owning it as well. We told everybody, look, Wall Street's probably going to treat this company like a IPO, so be careful. So when it comes, when it's available for us to buy, it's not necessarily on sale. All right. So once it became available on the New York Stock Exchange, it still goes through the same process where you need investors. There's a lockup period. It's all the same. It's all the same elements to an IPO. So what do? We always wait for companies like this to drop 50%. The average price of a new company that comes onto Wall Street or IPOs, guys, this is a real number. The average price after a year is minus 50%. Did you hear what I just said? You're no longer going to make money immediately on these IPOs. If you do, it's 1 out of 50 that's gonna go up. Or if you're trading it, you can make money on anything trading. I'm talking about my investors that's holding it 6 to 12 months. You got an 80 to 90% chance that it's gonna be down 50% in a year. These are real stats. So if you're going to buy this as an investment, for you guys that bought SpaceX, you should have known. We kept saying it for months. When you buy SpaceX, it's going to drop 50% or more. Y'all didn't want to believe it until it happened. Okay, that's why I only bought 3 shares, because that's not a full position for me. I wanted to buy it just in case. Just in case. I wanted to take part in it going up in price too. So I bought 3 shares. If it went to 0, I was going to be down, what, $600? Who cares? Well, I care. It doesn't matter in my portfolio. I'm sorry. Every dollar matters. It's just not going to bring the whole Harrison fortune down. All right. So I bought 2 or 3 shares. I just recently bought, I don't know, 7 or 8 more shares. My cost basis is 120. This stock is the same thing. I know it's memory. I know we need it. But you're thinking like a macro investor. Yes, this is one of the most important companies on earth. I get it. Wall Street don't give a dang about that. They took this stock from 194 to 124 like ain't nothing happened. Like it wasn't important at all. Treated it like a stepchild. Sorry if you're a stepchild. Redheaded stepchild. I meant to say that. Sorry if you're a redheaded stepchild. It's just a saying. Sorry. Can I say that anymore, guys? Or is that like one of them statements that'll get you canceled? Let me know. There's no malicious intent behind it. I'm trying to evolve. Y'all got to tell me when I'm wrong and when I'm right. It was down 35%. 50% is the number that we're looking for. So it got close to it, still might get to it. 50%, then you can start buying it again. All right, that's SK Hynix. All right. You said I'm good? I don't be knowing. Somebody might tell TikTok on me. Next thing you know, y'all pull up my live. It's in slow motion. He said red-headed stepchild. He's the devil. He's a racist. I'm like, there's redheads amongst all of us. You can't say that anymore, Joe. I'm sorry. It was no malicious intent. Jeez Louise. All right, I think we looked at enough. What time is it? 10:27. 3 more minutes. What else y'all want me to look at? 3 more minutes. We looked at Cisco, CoreWeave, Corning. I'm going through the list, looking for more stocks. We looked at NVIDIA. We looked at AXTI. Did I miss anything? If I missed your stock, you better put it at the bottom. We looked at ServiceNow. We looked at Wingstop. We looked at Microsoft. We looked at AppLovin. All right, I ain't going any higher. All right, let's look at SMCI. SMCI. I was in this stock. I was in this stock. I was hype. And it got caught up. Guys, Supermicro was on its way to doing big things. And then old boy from situational awareness took everything down, and this company went down with it. Sometimes you have the right investments at the wrong time. I think the same thing happened with this one. If situational awareness never had to liquidate its account, I promise y'all I'll probably still be in Supermicro. And Supermicro will be higher now. But once that happened, guys, it changed everybody's portfolios. Everybody on Wall Street had to reposition their portfolios because we had to the way the market was falling about a week ago, guys, it was falling in a way where you had to protect yourself. And by protecting yourself, you had to let go of a lot of speculative companies that were in your portfolio, or you had to lighten up. That's just what professionals do. They had to take down a lot of the risk, a lot of the beta to withstand this move. It's kind of like you see yourself about to hit a wall, so you start picking up pillows, you start saying you start bracing yourself for the fall. Wall Street started bracing itself, so companies like this got sold off, even though it was getting the momentum that it needed. So now it's trying to get that momentum back. It's not the same that it was 3 weeks ago, though. It's got to wait until its next earnings period, because the momentum came right after its earnings. And it was like, oh, shoot, that was the momentum this stock needed to freaking explode in price. So I was in, I made my money, and then I was out at break even, and I'm fine with it. I'm fine with it. I think I got in the 29 range. It rose up real fast. I don't even remember the dates. What was it? What was it? It was, I don't know if that was weeks ago. I don't know when it happened, but it exploded in price and then it went down in price. Maybe it was around here. No, it wasn't that long. It wasn't May. When was it? June? Oh yeah, that was in June. I think I caught this move right here from 29, 28. I think it jumped to 36 and then it went down in price and then it kept going lower. The 200-day is still angled down, but SMCI, guys, is kind of like CoreWeave. Now I get it. SMCI, Super Micro Computer, used to be in good standings with Wall Street, but then they started fudging their numbers. Wall Street doesn't like that. They expect companies that are on pink sheets, companies that are penny stocks, to do what they were doing. Super Micro was acting just like a penny stock, and Wall Street wasn't having it. So they started investigating them, and everybody pulled their money from them. The stock fell from $122 a share once we learned of the news, and the stock dropped all the way down to $17 a share. Guys, multi-millions. I saw somebody make multi-millions in this company, guys, and now it's worth less than, I think, that portfolio is less than $100,000. Can you imagine that? Can you imagine waking up and you got millions of dollars, and because you're over leveraged and your ego is telling you that it's gonna come back one day? Y'all know that was 4 years ago. I don't even know if, like, this was a person that used to come into the room every day happy for like years. And it psychologically effed them up. Can't stand the market, don't want to be seen by anybody, don't want to show their face. Because imagine having a little bit of money. You get lucky, and this is for these people that get lucky. You're supposed to get lucky. All you got to do is get rich one time. All you got to do is get rich one time. But god dang it, stay rich. Some of you guys get rich and then you lose being like you want to be mega rich. Get rich first. Remember, you obviously knew what you were doing to get to that point. You knew it. Somehow or another, you were over leveraged. You were in the right stock at the right time. You were able to make a lot of money on it. Trendline started to break. It gave you so many chances to get out. It gave you so... Listen, I keep telling you guys, Wall Street tries to get you out of these trades, guys. Y'all just be stubborn. Wall Street tries to get y'all out. It even made a nice little move up, but this is the move that catches y'all. That's why you're not going to get caught by this move no more. You're going to start recognizing this move as having crabs. So if you decide that you're making a whole bunch of money in something that's going parabolic, and let's say you just believe it's gonna go back up on this move that goes down, I don't mind you guys doing this. I don't mind you guys saying, I want to see if it can go up one last time. But if it tries to go and dunk, guys, if it tries to go up and try to dunk, guys, and it sprains its leg on its way to dunking, and it's on, and you see your friend on the floor holding its leg, get out. But what do y'all do? Oh, so-and-so's gonna be okay. So-and-so's gonna be okay. This is when you should have been absolutely out of this stock completely. You were wrong. At least keep $1 million. At least keep a milli. No, it's going back. No. And then this is what happens. It goes all the way down to 17. It goes all the way to 17. So I'm gonna show you guys the psychology behind this, right? Imagine this is $1 million, right? Imagine this went from, let's say you had 200 in it, and it goes to 1.2 million, right? You got 200 grand. I'm gonna take you through the psychology of this because y'all go through this all the time. You had, what does this say? $250,000. Let's go through this. This will be the last thing I show y'all. 250K goes to 1.2 million. All right, so you're sitting on 1.2 million. I don't care if you risk, I don't care, guys, if you risk 200 grand. I'd rather you guys, let's just put it there. Is that 120? No, that's 1.2 million. 250K goes to 1.2 million. I don't care if you cashed out 1 million and then played around with 200 grand. But that's not what these cats did. It went from 250 to 1.2 million. Then it got down to 800K. You know what happened if it got down to 800K? Now you're thinking, I want to still be a millionaire. Nah, I knew when I was able to tell my friends I was a millionaire, I can't go back and tell them I'm now a thousandaire again. Even though you got 800K, that's a lot of money. You still a thousandaire. I can't tell nobody I'm a thousandaire when I was a millionaire 2 weeks ago. Nah, I'm just going to keep holding this until it gets back to 1.2 million. Or I'm going to sell it when it gets to a mil. Now, the market gave you a chance. The market took this from 250 to 1.2 million. I'm going to show you this. It took you from 250K to 1.2 million. Then it dropped to 670,000. So you lost half your value in 3, 4, 5, 6 weeks. I'm showing you how Wall Street be treating y'all. So it goes from 250K to 1.2 million. This is all within the same year. It goes from 250K to 1.2 million to 670K. No, I need it to be worth $1 million again. The market gave them a chance. It got to $1 million, guys. I'm not lying. It got to exactly $100. It says, look, I'm going to give you a chance to be a millionaire. I'm going to give you a chance. I'm going to give you a chance to stay being a millionaire. I'm trying to give it to you. I'm trying to edit this. I'm trying. I'm doing everything I can to make sure that you stay being a millionaire. I'm giving you a chance. After it dropped to 670, 250, 1.2, 670, 1,800,000. Then it said, you know what? You got too much ego. I'm gonna take your 800. I'm gonna take your little $800,000 to 170. Now you're sick. You're sick to your stomach now. You're sick. You can't believe it. You don't believe that this just happened to you. You don't believe it. You can't sleep at night. You're figuring out different ways. You're trying to figure out how this happened. You're doing consultations. You're wondering what the heck happened. You read any positive news is the greatest news. You're not even looking at, you're overlooking all the negative news, and any hint of positivity, you're like, okay, we're going to get back to 1 million. Any positive news, you're staying with it. You're not investing in anything else. You're not adding to the position. You're not trading. You stopped all of your investing whatsoever. You stop everything you're doing because you're watching this now. And now you're betting on this one company to make all your money, when the move should have been, now that it's at 170, you lost. But no, Joel, do not tell me I lost, because if I lost, it's going to drive me crazy. I can't accept that this is worth 170K. I'm not going to hit the sell button, because once I hit the sell button, that's it. And I don't want to go and buy another company. I want to buy this one. I'm invested in this one. I want to be with this one. This is the one that I'm putting all my cards in on. So now it's sitting at, it goes from 170. Here's what's crazy, guys. It goes from 170. Look at the roller coaster. It goes from 170 to 650. You ain't taking 650. It goes back. It goes down to 200. It goes down to 200. It goes from 650 to 200. You don't even look at your portfolio anymore now. Who can stomach this? 170, 650, 200. Now it doesn't even hurt anymore. You don't even, this isn't even an account. You've now just shelved this account, and it's just something you've just accepted. I'm not even looking at this account for the next 15 years. If anybody even mentions the stock market, you get angry. You don't want to look at a chart. You don't want to trade anymore. You don't want to invest. I've seen so many of you guys go through this process because you're over leveraged. If you for some reason get rich, stay rich. Please. You only got to get rich once. You only got to get, how you going to get rich and then give it all away? Bye-bye. And I see a lot of you guys position yourself that way. The moral of the story is that you're going to get, everybody gets lucky. If you, for some reason, somehow get rich, stay rich, sell it. Look at your family. Look at the people around you. All right. Sell it. Put that million away. Don't think about what you could have made. But Joel, what if it goes to 5 million? Well, what if it goes to $5? Oh, that's not going to happen. But what if it goes to 50 million? You still got 200 grand in it. You'll make 10 million off of that. You can't do anything with 10 million. You can. Stop thinking about what it could be. You got to accept what it is at that moment. If it can change your life and your family's life, secure that. Secure your family first. You're smart enough where you can make it back again somehow or another. But now this individual is banking on SMCI. I've seen people bank on Nike, bank on Disney, bank on Ford, bank on Pfizer. Them stocks been down for 5, 6 years. Ford is still down. Ford has been down for 26 years. Ford hit an all-time high in 1999 and still ain't been back to its all-time high. I've seen people ride it all the way down. And it sucks to see you guys suffer like that. It does. It's sick to my stomach because I got to sit there and do consultations with you and I don't have anything positive to say. What I'm going to say? Oh, it's going to come. The only thing I can say is I don't want to say 80%, it's an 80% chance that the stock will see its all-time highs again. One day it might see 2 million guys in 2043. You know what you could have done with this 100 grand or 30 grand in that 30-year period, 20-year period? You could have made that 10 times over. But because you've given up on the market, you've given up on strategies, you've given up on the art of trading and investing, you'll get there, but by then everybody else will have 15 or 20 million. When you finally getting your million back, a million ain't even gonna be worth a million by then. Secure the bag. All right, I got to get out of here, guys. I will see you guys tomorrow. All right. Don't make the same mistake a lot of people I've seen make with SMCI. Never put all your eggs in one basket. If you're investing, no more than 20% of your account should be in my opinion, 20% of your portfolio should not be, more than 20% of your portfolio should not be in one individual stock. Now, you can do that up to about, I think they say $10,000. Up until you get about 10 grand, guys, you can be all in one stock all the time. All right. Once it gets to about 10,000, you want to start breaking that 10 grand up until about 5 different spaces. Okay. You probably don't want to own more than 30 stocks, more than 10 stocks, actually. I own more than 30 because I can manage them. But you really only need about 5 to 10. Otherwise, you might as well, if you own more than 30 or 40 stocks, you might as well own the S&P 500 or the NASDAQ. All right, because you've pretty much created a ETF for yourself. You got a basket of stocks. Well, those are a basket of stocks. Just buy the best indexes that's out there. You can buy the S&P, the SMH, and the NASDAQ, and I promise you, if you buy the SMH, the NASDAQ, and the S&P, after the volatility index goes above 50, you're going to outperform most of your friends and their portfolios just by owning those 3, and they make up your whole portfolio. I will probably do that when I get into my 70s or 80s, where I'm not really looking at stock no more. I'll put it in 3 indexes, the S&P, the NASDAQ. I'll probably put it into 4 things, like I'll have gold, the S&P, the NASDAQ, and then maybe the SMH or something that's similar to it. And then I'll call it a day. All right, but I will see you guys tomorrow. Thank you guys for the support. Thank you guys for the hats. And I will see you guys tomorrow. Hopefully we'll get some music going.